Right, we're good.
Dope. All right. So, usually on the day one, guys, we will start with like the beginning concepts, like what is a pip, all the boring stuff, right? But I kind of want to speed this one up so that way we can really hone in on the trading aspect of it, guys, right? Um, so one of the biggest parts of trading, again, is the range of emotions that you guys are going to have to master, right? You'll feel greed, you'll feel rage, anger, you'll feel basically a full spectrum of different feelings and emotions. And what we will have to do, guys, is manage ourselves. Okay. And how we do that is by being disciplined with our trading plan. Okay. The trading plan should be a trading plan should help you remove all the guessing or remove most of the guessing, remove your feelings and emotions, and have you basically just hone in on what is the chart showing you, right? So what's going on that chart. Now, whatever the mind can conceive, it can achieve. Okay. And this is why the psychology of Forex is such a huge thing. So we have to shift your mindset from looking at money or the dollar as something that's scarce, right? We have to shift your mindset from the scarcity mindset to the abundance. Okay. And to do that, it takes a few key things and a few new habits that you'll have to form over time, to basically, go to that next plateau and go to that next level in whatever aspect of life you want to go to, whether it's financially or learning a new skill or a new job promotion or anything like that. Each new level of you guys is going to require a different version of you, an upgraded version of you. So to understand that. So please, please, please hone in training your mind and yourself to control your emotions. And what I mean by that is, even let's say if you're at work, you get pissed off at your boss, right? That's a good starting point to train your mind and to train your emotions. Because whatever you feel outside of trading, guys, is going to transpire to how you trade. All right. So train your mind, guys, to always be thinking in abundance, be thinking of success. Speak into yourselves, right? Not only that, speak into others, build each other up, right? But at the same time, hold yourself accountable and self assess and be realistic with it. Like if you know that you're not just somewhere, or you feel you're not somewhere, be realistic with it and try to figure out why. So train your mind, kill or be thrown to the gulag, basically. And that's what this market does to you guys. It will basically tell you a hell of a lot about yourselves. Okay. I can't stress this enough, that your mindset will determine how successful you are in this industry. You must begin to train your mind for the life you envision living. And you must believe that this will work for you and you will learn it, right? You must understand that this is more psychological than technical trading. All right. So it would be a lie to say that success in Forex is solely dependent upon a system or strategy, as consistency and profitability are actually determined by your mindset. All right, I'm gonna read that again. Okay. Success in the Forex market is not solely dependent upon your system or strategy. Okay. As consistency and profitability are actually determined by your mindset. And that single bar for me, guys, as I've mentioned last class for you guys, like that hones in a lot with me, because like I went through a depression with this shit, and it lasted for years, and it almost cost me my life. Like I will show you guys, like like I was contemplating suicide, guys. Like my life was just in a whole hellhole. Now I'm not blaming this on Forex, but if my life is like that and my mindset is like that, guys, I'm never going to be profitable trading this market. And that's what I'm trying to get at. Okay, so balancing your emotions in line with your mental processes is vital. If you do not manage these aspects, you will find yourself unable to consistently make money in the market over the long term. And that's what we're here for, guys. So um, a lot of the times what I say, or I've been arguing with on Facebook with politics, right? Back and forth, and people are talking about economics. And I'm not going to get into politics, but I always tell people, yeah, you're looking at microeconomics. We want to be concerned with macroeconomics, the bigger picture. And this is Forex is the bigger picture. Forex is like, it's telling you the world's economy, right? It's telling you what different countries are doing. So why do traders lose? It's true that, most people who attempt to trade Forex lose. And there's a rational explanation for this. Most people assume that this market is a get rich quick scheme. You can never look at this market as a get rich quick scheme. It will chew you up and spit you right the hell out. Okay. So this is what I'm trying to tell you guys. Listen, think macro, think long term. Okay. So we will try to keep things in perspective to help you deal with unrealistic expectations, but you must understand that Forex is an investment. All right. It's not a gamble. It's not a hobby. You can turn it into a hobby and make pennies on the day, or you can take it serious and like a business and be really successful at it. Unrealistic expectations will undoubtedly work against you, and will only award you with an account destroying mindset. You will become pressurized and feel a need to make money in the market as soon as possible, inevitably compelling yourself to make irrational decisions. So trading must be done with absolute clarity. Your mindset has to be almost robotic, and it cannot allow stress to dominate your actions, whether it be money oriented or even your girlfriend or boyfriend cheating on you. Okay. So again, guys, I'm just going to stress this for the whole hour, basically, right? Hone in on your feelings. If you feel yourself getting anxious, right, about a situation at life, pause for a moment. Ask yourself, why? Why is this happening to me? What did I do? Okay. That's a moment to self-assess. Okay. And that's what this market is going to force you to do, because at the end of the day, it's you in the market. It's not the signals in the market. It's not the signals you in the market. It's none of that. It's you and the market, guys. Simple as that. So when you are in different real life situations that, your emotions are flaring, take a moment, guys, honestly. And psychologists tell you this, take a moment, take a deep breath, take a step back and think logically. Don't think with emotions, think logically. Okay. Almost robotic. So when you begin to trade with this need or pressure to make money, consciously or subconsciously, you inevitably trade emotionally, which is the fastest way to lose your money. So before you consider trading, you must be financially able to take this loss, guys, because I guarantee you're going to lose money at first. We don't want you to, but that's just what it is. We all lose money. Okay. Now, our risk management is what allows us to be profitable, right? I believe Ryan said he's around a 60 to 70% accurate trader.
Yep.
Right. So, I mean, if that goes to show you guys, you don't even have to be 80, 90, 100% accurate with the risk management. Like you can be 60 to 50, preferably 60 to 70 like Ryan. All right. So it will never be fun. However, it is a part of the business, which at the end of the day is highly rewarding. So do not trade if you drive yourself crazy after a loss. And trading isn't for everyone, and it's certainly not for the weak-hearted. Like I said, this industry, guys, teaches you so much about yourself. And one thing as humans that we don't really have the ability to do is self-assess. No one likes to self-assess and really, be real with themselves in most times. Okay. So the ability to self-assess is a rarity, and we need to learn that ability, basically. Neuroscientists like to say neurons that fire together wire together, meaning that when you think and do things in a repeated fashion, the neural pathways in your brain take a new form and get deeper over time. Those neurons become thicker as well. So wherever you direct your attention will define you on a neurological level, meaning whatever you think about, practice, believe, you become on that neurological level. Just remember, practice makes perfect. You're never gonna be perfect in this market. All right, I've been trading 7 years now, and I still say I'm not no guru. I don't know everything. I've always said, yo, I'm still a student of the game. You got to be like that, guys. So, what type of emotions will you experience? Right, like what's the range of emotions? Now, this chart to the right is why, it's a different look at why you sell high and you buy low, right? At the highest peak, what usually happens, like when you feel like at your highest level in life, you usually get hit with something, right? And it's like, damn, did that really just happen? I was doing so well. It's something like that. You're overconfident, basically, right? On the vice versa, let's say, you feel like you're at the bottom of the barrel, you're at the bottom of the bucket. Like life is just slammed on you. I was in despair. I was depressed as fuck. Excuse my language. But hey, I got myself out of it now. And I'm back to optimism pretty much, right? Relief. That's where I'm at. I'm not in despair anymore. So we'll cover a few of these emotions for you guys. But successful traders recognize this as a point of maximum financial risk on your overconfidence in the bull market. This is when, let's quote unquote say, like the double tops or the C is really being completed and things of the sort like that, right? Then you got despair, the exact opposite. All right. Successful traders recognize that this is a point of maximum financial opportunity. Doubt. All right. So doubt kills more dreams than failure ever will. If you don't believe that you can learn this, guys, you're never going to make it. And that's where it all starts at. Like, for instance, nobody goes to nursing school believing that they will never be a nurse at the end, right? Nobody goes to accounting school with the doubt that they'll never be an accountant, right? So you have to look at that. Like nobody's going to come to Forex school with
Reach.
Epic and Dynasty Exchange University expecting to not be a Forex trader. So your why must be bigger than what it currently is. I don't care what your why is right now. If your why is to be the last human on earth, man, that's not big enough, right? The worst thing a trader can do is doubt him or herself. Doubt leads to a trader's questioning other traders, or even worse, throwing themselves headfirst into online forums and websites seeking for answers that don't even exist. So always remind yourself that your opinion is all that matters. Trust your gut, trust your own judgment, live with it and love it. Because again, at the end of the day, like I said, it's not you and the signals, it's you and the market. Now, while there are groups and other resources available that may have signals, and with experience, that may or may not be greater than your own, and self-doubt and desperation will result in you relying upon the opinion of others over your own. We want to teach you guys to be self-sufficient while using the signals when you're not able to look at the charts, right? So throughout your journey, you must trust your own judgment, and it will only improve your experience and your efforts on the charts. So speaking on signals, guys, if you're all taking signals, that's perfectly fine. We're not knocking that, right? But what we're saying is use those signals as more of an opportunity to learn. So even if it loses, you know, try to figure out, what made that trader take that type of trade or what made that trader want to enter right here. Because I can almost guarantee you a lot of the traders have a similar entry zone. Okay. So doubt can arise after a few consecutive losing trades, often making you feel as though you don't have what it takes. Each time you feel up against the ropes, guys, again, take that deep breath and some time away from the charts, returning only when you're relaxed. You can control doubt with experience. How you feel in your first trading month is incomparable to how you will in your third or your fourth month. And I'm trying to tell you this, guys, like, yo, it's amazing the third or fourth month compared to when you first start. It is experience above everything, basically. It's the time you put in looking at the charts and learning. No single trader will become profitable within the early stages of trading. And what I mean by the early stages is like if you don't know what like a pip is, if you don't know what support and resistance, if you don't know the program, right? Those are the early stages. It is not a smooth sailing journey, and you will experience a turbulence of learning curves, which will mold you into a successful trader over time. So everybody's going to catch on to different things sooner than the others. Some sooner than others, some later than others, you know, and that's just a natural part of life, though. So before I go on, let me see what's going on in the chat.
Yeah, I'm kind of helping you out watching it too.
Appreciate that, bro. Appreciate
I got you.
So another emotion, guys, is fear, right? And fear's a liar. We all know that. Fear's kills more people's dreams than anything. The fear of, you know, the fear of failure, really. Like nobody wants to fail, but most successful people know you fail your way to success, right? Because they look at each failure as an opportunity to learn. So what you have to do is, you know, look at this loss as an opportunity to learn. And that's how you have to look at trading, guys. So fear is the stealer of joy. It can be so easy to become fearful of the market, particularly for beginner traders who have not yet assembled a trading plan or an effective trading strategy, which consists of price action methodologies. Fear can also be created from a string of losses, make it seem that there is no hope in sight, and it can certainly kick one's confidence. It's important to note that even 80% winning accuracy rates can still throw 20 losses out of 100 at you. Just stay cool, guys. Push forward and onwards. And this is why your risk management is important, because those 20 losses can come 20 losses in a row out of 100, right? Let's say you're on trade 30. Your next 20 trades to up to 50 can be losing trades, but after those 20, those next 50 can be winning. Trading and risking too much can cause fear of losing. There's a simple solution to this. You should only risk as much as you are comfortable with losing. If the loss is going to hurt you or be one that is unbearable, bring your lot size down and the risk, okay? Fear paralyzes the nervous system, therefore severely limiting your trading, guys. You can't think clearly, as you will miss out on good market opportunities because you were stuck in an illusion of fear, worried about being stunned, worried about losing. You can't worry about losing. And this is why your trade plan takes that all away. You trade the setup of your trade plan. If that setup's not there, you sit on your hands. You don't force it. Fear is a natural feeling once a loss occurs, regardless of how wealthy you may be. No single person enjoys losing money. You must reaffirm to yourself that you are in this to achieve longevity and that the market game is just like any other business where losses you incur are your overhead, right? Success cannot be forced. Don't rush this, guys. Don't rush this. It's not going anywhere. It doesn't matter if you're making 1% return a day, guys. Do you realize what a 1% return per day looks like at the end of the year? Like, let's just really think about that. Like, so there's like what 200 and what 30 something trading days. Correct me if I'm wrong. I don't know. It's somewhere around that. That's 200 and something percent, guys, on your return, right? At 1% a day. That's crazy. So you must ride the waves of the market. Take your time, and eventually your fear will be a thing of the past. Staying balanced and in control is vital in your battle against fear. Sitting in front of your screen after a loss can and will be destructive, right? So you must learn to leave your emotions at the door. Leave them in the bathroom. Leave them wherever. Just don't bring them to your trade station. Once a trade plays out for the good or the bad, a real trader will move away in order to gather their thoughts and live to fight another trading day. My general rule is, guys, if I lose 3 trades in a row in a day, I'm typically out. Like I'm calling it a quit for the day. Take my L, right? Cool. Go to the next day. Revenge. This usually comes after you lost, right? You like, damn, I gotta get that. I gotta get that back, right?
Yeah, I master this.
Hey, I trust you, bro.
Torn, T-Bass a pro at revenge trading.
Oh,
Huh?
oh yeah, man, I love this.
Oh man, listen, this ate
I
me
gotta
up
get
in
my
my
money
earlier
back,
year.
man.
Yeah, bro. Like this ate me up. So this was one of my I say biggest fall points when I was depressed, right? It's because like sometimes you know your shit well enough to trade, right? And it's just like, damn, why I keep taking these losses when I know my shit? So it's like, damn, I know my shit. Let me get this back. right? That's revenge trading. It may not be an aggressive revenge, but that's, revenge trading. Now, the get back ain't what you think, guys. Okay, if you're in this mindset, I kid you not. The get back ain't what you think. You'll get got again, and that's what happens, right? So, following a losing trade, if you feel revengeful, this is just human nature. We all felt this and feel this, right? And this is why I tell you guys, if you start to feel a certain way in certain real life situations, try to manage your emotion right there. Okay. I've been trying to master my emotions, guys, for like 7 years now. I've got a few of them actually pretty down pat. I don't really get angry in certain situations anymore. Um, I, it's honestly like it's pretty blissful. It's crazy. So I live my life now with the simple phrase of control the controllable, right? Out of any equation, whether you did somebody wrong or somebody did you wrong, how you react is the only thing you can control, right? So any trade can turn into a loss at any point, and it's not your fault, and you should not take it as such personally, right? And a prime example is what happened in the markets today when Trump tweeted out that, there's no stimulus unless he wins the election, basically. That caused US 30 and a lot of the market to go from looking very bullish to a real nice down move real quick, right? So that's never your fault, guys. The trade you took that bought probably was a great ass trade. But again, such scenarios can be triggered by, like Trump tweeting that stuff. It can be triggered by natural disaster on the other side of the world. So with that being said, a wise trader will never put all their eggs into one basket. So what I mean by that is never over leverage, right? Not even that. Guys, I don't even keep, I use two brokers. if that helps you all make it, make sense. I don't put all my eggs in one basket. I use two brokers. The worst decision you can make after taking a hit is to jump straight into another trade. As you are entering a trade for the total wrong reasons. You haven't looked at your trade plan. You haven't assessed the trade itself and things of the sort. And the outcome of it will be an even larger loss, leading you to the swirling abyss of pain and even more hardship. So revenge trading can be lethal to your emotions and therefore your account. So remain mature to your losses, guys, and your long-term goals. And this is why you need to have tunnel vision for the long-term picture, your macro image, right? So revenge arises from your inner depths upon receiving any kind of loss, which triggers anger, jealousy, and this may apply to circumstances in your personal love life, between friends, or even at the workplace. This may often lead to negative consequences such as fallouts or bad decisions. However, you must remember that the financial markets don't care, guys. The world doesn't even care how you feel. Revenge-based actions and thought processes will leave you with a tumbleweed account and possibly a face in the pillow. A balanced internal reality equals a balanced external reality. And that's why I have my saying, control the controllables. The only thing we can control in any equation is ourselves. Greed. Yes. This is another thing that goes hand in hand when with revenge. Once you start to understand this shit, right? You're like, damn, I know this shit. Like, let me keep getting some more. Greed is possibly the most dangerous emotion. When you experience a string of wins, you will most likely feel like you're on top of the world, and this is what causes greed and overconfidence. Hating your take profit can make you feel as though you have the holy grail, prompting you to search for supercars and fall into the illusion that this is so easy. Now, guys, I'm not going to say this isn't easy. The technical aspect of trading, learning it, is easy, right? But again, the bulk of trading is psychological, and that's the hard part. Greed can also arise when a trader doesn't have a structured plan in mind or any realistic targets which they want to achieve. Trading without goals is just like driving without a destination. It's going to make you run circles and drain your fuel tank. So stay humble, disciplined to your trade plan, and remember this: a losing streak can always come just as fast as a winning streak. All right. And like I said, guys, a losing streak there's no length for that. Okay. There's no length for that. You have to understand that. Only increase your trading volume within the strict guidelines of your trading plan. Just because your count is going up doesn't mean instantly increase your lot size, right? You are not here to flip your account. You're here to obtain the trading skills necessary to live off your account. So we're not here to flip money, guys. You're going to flip some accounts, but you're not here to do that consistently or constantly. You're not here to, put 1,000 in to flip it. No, we want to put 1,000 in, get it to 100K, take that out, invest in a business, right? Now that you have that business, you can maybe put 10,000 back in, flip that to whatever, and keep doing it. So we're not here to just, flip accounts. No. Greed is further controlled with staying grounded and setting proper trading targets. Once you know what your target is and have achieved, you won't be tempted to blindly risk and ruin your plan. Once achieved, call it a day and hold gratitude. Okay. And the trading plan that we recommend or that we have for you guys in this course, there's 3 different types of targets. You've got like a pip count, you've got a money amount, and then you've got a percent. So those are 3 different targets that once achieved for that day, for whatever you have for that day, you call it quits. And this helps, control over trading. So for instance, like if I'm, if my pip count's 30, but my percent's, 3%, and then my amount, let's say my minimum amount for the day, let's say it's at 350. If one of those targets is hit, I'm done for the day. Even if, let's say the 20 pips doesn't equal out to, let's say the 350, right? I would be done for the day as a new trader. Not only that, as a new trader, once you switch from demo to live, you should be on the very minimum lot size that you can possibly take for at least, I would say at least a minimum of 2 weeks. Okay? Because the feeling of demo versus the feeling of real, guys, it's a very different feeling. Okay? Even though you're almost doing the same shit, it's a very different feeling. Okay? So you must work towards conditioning your subconscious mind that trading is a long-term game of probabilities. If you are implementing a good risk to reward ratio, eventually you'll become profitable in the long term, assuming you follow your trading edge with discipline. Stick to the plan. So what is a proper mindset for trading? How does a trader think? Now, building a great trader's mindset is only half the battle, while the other half is maintaining it. You have to accept how the market works and that not every day is a trading day, or maybe even your trading day, while it might be somebody else's trading day. Because this is an individual sport. What I see is going to be different from what Caesar sees. What Caesar sees is going to be different from what Ryan sees. What Ryan sees is going to be different from what Brian sees. It's an individual sport. So choose your trades meticulously. Okay, taking pride in your analysis and reaffirming the facts of trading the Forex market. At times, the battle with your own mind is the most difficult. However, once you have overcome this hurdle, guys, you will open yourself up to long-term success. I want you guys to really sit and think about who you guys know that are considered successful traders to you personally. And I want you to think of several different ones, and I want you to try to just think about how they live their life, right? Think about what you think they would do. Think about how their mind works, okay? Because I can almost guarantee you that they all have some type of common denominator, basically, with how they think as far as money or how they think about trading, okay? So keep your mind clean, keep it still. Really focus on following prolonged and stressful hours in front of a screen. And it is possible for your mind to present trade opportunities in that reality that's not there. So don't force it. Trading should be calm and relaxed. Take the middle path by remaining centered upon a winning trade and centered upon a losing trade. Basically, you're balanced, guys. If you win, cool. Celebrate, you know what I'm saying? But don't overdo it. Cool. Because you have more business to be done, basically. You haven't really reached your goal. That's a small victory. That's a small victory or a small battle won. The war's not over yet till you reach your goal. So trade smart, not often. Okay. Every day is not a trading day. It's the pips, not the money. And what that means is if you can consistently catch 20 pips, guys, that compound is strong. He who says he can and he who says he can't are both usually right. And this is where you have to believe, guys, that this is something that you can do. It starts with you. Now, any questions so far? You can unmute yourself.
I don't really see any in that chat.
Cool. We'll keep
But
going.
but if you do have some, unmute.
How would you, or what would you do for your, like, for every 100, how much would you risk in a lot size?
Oh, that's the mini lot size ever, 0.01. So up until, so from 100 to $1,000, I typically say stay less than a mini lot size of 0.10, right?
Yep. I would too.
Exactly. And that's
I know.
and yeah, it may not make the money that you guys are seeing or want to see at first, but you guys have to understand that, you're trying to get your legs. You can't run yet, right? You got to crawl before you can walk. You got to walk before you can run. So keep it low until you get the feel for the real environment versus demo, and you figure out how you as a person, what's your tendencies with the market. And this is actually something that you guys should be trying to be working out on your demo. So before I go to price charts, I'm gonna touch on this for a little second. So guys, just how each of the currency pairs, they move different, right? They all have favorite times to move. They all react differently to certain types of news and things of the sort, right? So you as a person have to be aware of that. Now, just like the market has its tendencies, you yourself have your own tendencies. And this is where it's important to have that trade log or that trade journal. This is where you can't measure something you're not tracking. You can't grow something that you're not even really tracking, right? So this is the trade journal, guys, is a key element to your success. I don't think I even mentioned this last class. And if I didn't, I apologize. But the trade journal is so crucial to your success. And what I mean by that is because it allows you to go back and review any trade that you've ever taken. You can go back and self-assess what went right or what went wrong. In the beginning, guys, you guys
Or you
should
back test yourself.
Exactly. In the beginning, exactly. Because what this is going to do, guys, because right now you don't know your favorite times to trade. You don't know your favorite pairs to trade. You don't even know how your favorite pair even reacts. You don't know none of that. You won't even figure none of that out without writing it down in some type of record. Most people use my FX book to track all their trades. That's perfectly fine. It's got an app and all kind of shit. But me personally starting out, I would say write it down. Use it as an actual journal. Okay. And the reason why I say that is because there's a few different things in the first journal for a newbie that I really want to, put into it, such as, hey, why did I take this trade? Is it because of the confluence, or is it because I felt it, right? Your sentiment said so. So the trade journal is another key tool to your all success. Get one, or just get like a ledger. I advise, writing down the time you took the trade, the time you closed the trade, how you felt when you took the trade, your list of confluence, the result, and what did you learn? Right? That's it. Now, let's go. Price charts. Price charts are, you know, they're what we speculate on. They are the software that we use and the programs that we use. They're the MetaTrader 4. There's the Thinkorswim. There's the NinjaTrader. They're the, you name it, the TradingView, all that. Those are software and programs that present price charts to us. Now, a price chart is it happens to be the first tool that every trader trader using a technical analysis needs to learn. Like, what is it? And it's this little box to the right. It's a chart. A chart is simply a visual representation of a currency pair's price over a set period of time. It visualizes the trading activity that takes place during a single trading week or a single trading period, whether it's 10 minutes, 4 hours, 1 day, or 1 week. Any financial asset with price data over a period of time can be used to form a chart for analysis. Price changes are a series of mostly random events. So our job as traders is to manage risk and assess probability, and that's where charting can help. So with the chart, it's easy to identify and analyze a currency pair's movements, patterns, and tendencies. On these price charts, what paints are called bars or candlesticks. This to the right is called a bar, all right? And it's a candle bar. It shows the opening and closing prices. The opening is the hash to the left of the vertical line. The close is the hash to the right of the vertical line. Bar charts help a trader see the price range for each period. Bars may increase or decrease in size from one bar to the next and over a range of bars. The bottom of the vertical bar indicates the lowest traded price for that time period, while the top indicates the highest paid price. The vertical bar itself indicates the currency pair's trading range as a whole. So basically from the low to the high, that's the range that it traded in between. Let's say the low was at $1 even, the high was at $1.05, right? That's in between, that is the range basically that price was traded in between. As price fluctuations become increasingly volatile, the bars become larger. As the price fluctuations become quieter, the bars become smaller. Fluctuation in bar size is because the way each bar is constructed. The vertical height of the bar reflects the range between the high and the low price of the bar period. The price bar also records the period's opening and closing prices when attached with the horizontal lines. The hash on the left is the opening, the hash on the right is the closing. Candlesticks is what we use, okay? Now, I'm not saying that, candle bars are bad. They're actually pretty awesome, but we use this because it's visually appealing, basically. Candlestick charts show the same price information as a bar chart, but in a prettier graphic format. Candlestick bars also, candlesticks still indicate the high and low range with the vertical line. However, in candlestick charting, the larger body or block in the middle indicates the trading range between opening and closing prices. Candlesticks help visualize bullish or bearish sentiment by displaying those bodies using different colors. The advantages of candlestick charting, though, they're easy to interpret and are a good place for beginners to start figuring out Forex chart analysis. They're easy to use. Your eyes adapt almost immediately to the information in the bar notation. Plus, research shows visuals help with studying, so it might help with trading as well. Candlesticks and candlestick patterns have cool names such as shooting stars and pin bars and things of the sort. And these names help you remember what's going on with the price or price action, right? Candlesticks are good at identifying market turning points or reversals from an uptrend to a downtrend or a downtrend to an uptrend. And we'll get to that later, guys. Now, I'm going to assume majority of you guys have demo accounts and things like that already open. Not open, but set up, right?
You can throw it in the chat if you want, everybody, and I'll keep an eye on it. Everyone got an account and set up tools? Judy said yes. Nadine said yes. Obviously, yeah. Tyler doesn't yet, so we can.
That's cool. I think he's here local with me too. I'm gonna get with him and send him some
Okay.
videos and get him together.
Okay. Yeah. Dorcas said yes. Bill said yes. Laura's yes. I know
A lot
Debbie's
of
yes.
yes.
Valerie's yes. Aaron, I'm not sure about Aaron.
Okay.
T-Bass, so pretty much everybody, yeah.
Cool. That's what's up. For those who don't, you all can private message me or something like that, and we'll get you together. I'll get you together. Now, this is another good topic, is risk management. This is outside of emotions. Your risk management is going to be the second biggest factor to a successful trader. Risk comes from not knowing what you're doing. That's from the trading goat himself, Warren Buffett. Do you think he is you think he looks at the market as risky anymore? Like, I'm sure to some certain degree, but not how, like, when he first started, or even when he hit his first failure, probably doesn't. So risk comes from not knowing what you're doing. What's the risk? And how do you manage it? How do you manage it? So every time you enter the market or enter a trade, guys, it's going to carry a certain level of risk. And prior to entering a trade, you must be aware of the amount of risk that is involved within that particular trade. Risk is a highly important aspect to trading, and knowing the amount of risk on each trade is one way to limit and protect your capital. And this is why I said, guys, if you're taking signals, don't over leverage yourself. And what I mean by that is, let's say you got, $100 in your account. And let's say there's 3 signals sent out and you take all 3 trades. Each trade is going to carry a different risk percentage against your account. So so your first trade you enter, it may have been, let's say, 2% risk. That second trade took that 2% probably to like a 5 to 6%. That third trade probably took it to about 10. So now you're probably a little bit over leveraged, right? So 4 things you must do to manage your risk and have longevity in the Forex market. You got to identify risk, okay? Identify a potential buy or sell. You have to assess the risk. You have to assess where a potential stop loss and a take profit level. Then you have to control the risk. Set your lot size properly based on a percentage of your total equity. Then you have to review those things. Okay? Now that you identified it, assessed it, and controlled it, does everything follow your trade plan? So, identify risk. Know what type you are speculating. So before you can know what type of risk, before you can know what the risk of a trade is, you must know what type of trade you're speculating. And to do that, guys, we use time frame correlation, and that's something we'll get to later. And that's going to help us choose between whether it's going to be a position trade, which is a trade held for more than a day usually. Is it a swing trade that's held in between 8 16 hours, potentially into a position trade? That's a typo. Is it a day trade or an intraday trade? We will refer to anything held for 1 to 8 hours, this type of trade, an intraday trade. Or is it a scalp or short term? Anything held for less than an hour? Now, there are many types of traders, so you don't really have, or there's many types of trades, guys, and you don't necessarily have to define yourself to being one particular trader, right? You don't have to define yourself to just being a day trader. You don't have to define yourself to being just a swing trader. The system that I have basically allows you to trade the setup. And by trading the setup, that determines what type of trade you're entering. Okay. So there are many types of traders. Find out which one you are. Are you a scalper, a day trader, swing trader, or position trader, and what it means? This is all something that you guys should be figuring out on your demo account. What's your appetite? How much do you want to look at a chart, basically? right? How much do you, what's your risk appetite? Okay. So a scalper is someone who trades on the tick or the 1 minute chart, tries to catch real quick moves in the market. They're in and out in less than an hour, sometimes minutes. You take several trades within an hour. These guys enjoy lots of action. They enjoy being, you know, the chart watching and the action of the market. There's nothing wrong with that. Now, if you can't manage your emotions, though, there's a lot of shit wrong with that. All right. A day trader, they trade the 5 to 15 minute chart. I would say anything less than an hour would be a day trader. Tries to catch the market move of the day, basically from the high or a low, in and out on the same day, usually in less than a couple of hours. Trades a few times a day. These guys, again, enjoy lots of screen time. Are you a swing trader? This also includes trend trading, which is that's what we do. We trade the 1 hour to the 4 hour chart, or we're in and out in a few weeks, but some trades can run for months as trade, and we trade a few times a week. These guys are quite relaxed. Swing traders are typically relaxed guys. We look for that position, we enter, we go on about our lives. Okay. Now I will say a swing trader doesn't necessarily hold it for weeks. That's more of a position trader. Which is the next one. And these trades, they trade the daily and the weekly charts. They take the long-term perspective, and these positions are often left to run for months or weeks, sometimes years. These traders don't even trade for real. They'll trade the news, basically. All right. So you've got to figure out, you know, what type of trader do you want to be? Again, the system that I've got for you guys doesn't. You can define yourself to a specific type of trader, or you can just trade the setup. If you enjoy lots of action, then you become a scalper. If you enjoy lots of screen time, you become a day trader. If you want the more relaxed approach, you become a swing or trend trading. And if you are into fundamentals, your long-term position trading will be your choice. All right, let's see. Boom. Assess the risk. Know what type of trade, guys, that you're entering. And this is why we use time frame correlation to know that type of trade that we're entering. So on your daily time frame, guys, that's looking at a position or a swing. Okay. Those type of trades are going to have the largest or the widest range in pips for your stop loss. So if you're looking at like the daily and you see your setup on the daily, that stop loss, guys, could be 50 to 100 pips, right? If you're on the 4 hour, that's a swing trade or an intraday trade. If you're on a 1 hour, that's a intraday trade or a short-term trade. Those, anything less than an hour, guys, has the shortest or the narrowest range in pips for your stop loss, right? Now, regardless of what type of trade it is, each trade will have the same risk management parameters of defining your entry and exit points, defining your, which is actually your take profit and your stop loss, defining your lot size, and the percent of total equity. Okay, how much are you risking percent-wise, right? So they're all going to have those same parameters, but they're going to have different values for those parameters. And regardless of the time frame, each potential setup will have a minimum of a 2-to-1 reward to risk ratio, and that allows you to be a 60% trader, guys. You got to control the risk, the calculation. This is the good part. So this is something that you would write down in your journal, or do in your journal, actually, manually. The broker's not going to do this for you guys. Okay. There's lots of risk calculation programs out there for you. You can use Excel spreadsheets and blase, blase. Now, what is the calculation? The calculation is your risk amount in money divided by your stop loss. That's going to be the correct lot size to stick within for a minimum, that's backwards 2 typo, for a minimum of 2-to-1 reward to risk ratio. The first step is to determine and decide the amount of risk you wish to place. This should be determined by your account size. For training purposes, to be technical and proper and politically correct, between 1% to 3% of your account size is what we strongly suggest. Now, let me go back to the signals. How does that transpire to the signals, right? Again, this is where I said, let's say if you take 3 signals, those 3 signals are going to have a different percentage of your account. So you have to watch that. So here's the example. If you got $1,000 account, $30 would be $30 would be 3% of that account. Okay, so that means you can't lose basically more than 3%, $30 on a single trade. A good risk reward would be 1 to 3, risking that 3% to gain 90. Risking that 3% to gain 9%. So with a $1,000 account, guys, you should be risking $30 to gain that 90. So say you have a valid setup which requires a 30 pip stop loss, and you got $1,000 in your account, right? To work out what lot size is relevant work out what lot size is relevant, you would do the following. You take the $30, which is your 3% risk amount, you divide that by 30, the number of pips required for your stop loss. Okay, that's going to equate to an average of $1 per pip. That $1 per pip, the lot size that pays out approximately $1 per pip is that mini lot size of 0.10. I'm gonna leave that up there for you guys because that's something I would write down, guys. Write down this equation.
Screenshot.
Straight up. One more example. Let's say your account size is 5690. You only want to risk 2% this time, right? As you're being more conservative. 2% risk is $113.80. The required stop loss for the trade setup that you're speculating is 55 pips. So again, you take the 2% risk amount, you divide that by your stop loss of 55 pips, and you get 206 per pip. So the lot size that you would equate to is approximately 0.20, which pays out approximate value of $2 per pip. And this is something, guys, that you actually have to do if you don't have a risk calculator for every trade. So let's say you're in one trade already and you already did this calculation, right? You now have to do this same calculation for the next trade that you take. Okay, so there's work to this, guys. This isn't something that you can just, hey, I'm going to come here, learn this shit, and then boom. No, you guys have to really, it's a business. It's a business. So let's review the risk. Does everything align, right? There will never be a trade that you should take that is less than a 1 to 2 risk to reward ratio. So as long as you follow this, you could potentially be a 50-50 trader and still be net profitable. Make sure all your parameters for proper risk management align. That's a typo too. I didn't even put a line. That's crazy. Then, so that's the end of the boring stuff, guys, that I want to touch up on, right? Fundamental analysis. Are there any questions about risk before I move on to this?
Can you pull that last slide back up for a second, please?
Yes, ma'am. You talking about the which one? This one?
That one.
Yeah.
Thank you.
You're welcome. All right. Let's see this. That's funny. All right. So let's get into some good stuff now, right? This is fundamental analysis. This is getting more into the economic and financial factors behind the Forex industry. In order of importance to me are number one, the long-term trend, number two, the current chart pattern, and number three, picking a good spot to buy or sell. That's a quote from Ed Sikota. He's a top market trader and commodities trend trader. Now, how does that relate to what I'm teaching you guys? So, I'm teaching you guys a triple screen method, okay? And coincidentally, those three screens coincide with the order of importance to him. So the first screen is your trend, your long-term trend, your structure chart. What's going on, right? Chart number two is the current chart pattern. So this is where we look for ABC retracement of some sort, right? Screen number three is picking a good spot to buy or sell. This is where, after we see the ABC pattern or whatever we're looking for in chart two, this is where we're looking at the price action itself. Overview. What is fundamental analysis? So every day the markets see the release of important pieces of economic data, be it the Bank of England regarding inflation or job numbers, or the Fed minutes, US CPI manufacturing numbers, or the Eurozone interest rates, etc. This is what we call macroeconomic data. This is what we have to pay attention to. And these data releases impact price action, both long-term and short-term. Fundamental announcements are a vital part of trading Forex, stocks, and pretty much all financial markets. They help to move the markets along faster, creating huge liquidity in short periods of time. They also create a lot of volatility. This, combined with liquidity, can be taken advantage of. The general consensus is, and always has been, markets will follow economic numbers. In Forex, fundamentals mean we are basically pitting one economy versus another. So for instance, on the USD GBP, you're pitting the United States of America versus Great Britain, Australia versus Japan, odd JPY, Switzerland versus USA. That's actually backwards. That's going to be the USD CHF, right? New Zealand, Australia, NZD AUD. We use www.investing.com, which is a website, of course, and we use FX Street News, which is another website, and that's also an app. And we use Forex Factory, my personal favorite, to monitor when news is going to be released and what happens. Now, the difference between fundamental analysis and technical analysis is over to the chart on the right. Fundamental analysis is most useful to predict the long-term trend. This is where your position traders thrive. It's a must for a long-term investor. Earnings, NPM, balance sheet, cash flow, promoter holding, those are different indicators, quote unquote, or EAs, expert advisors, that fundamental traders use. Okay, fundamentals do not change based on external news because they are the news, right? Not much fundamental analysis for commodities, which is like your gold and your silver and things like that, right? Now, what's technical analysis? That's where we thrive. It's most useful to predict short-term trends. It's a must for a trader, such as you and I. Bollinger Bands, an exponential moving average, the stochastic, the RSI, Fibonacci, those are all different trade tools or expert advisors that we use. External news can defy technical analysis, which is what happened today when Trump tweeted. That tweet was external news and it defied all technical analysis. That's why it's important to have stop losses in place and things of the sort and control your risk. For commodities, there's only technical analysis and indicators, basically what I just mentioned. There's no news for commodities, basically. Macroeconomic data. A look at the most important news releases. Okay. Now, we will cover briefly the most important factors that will have the highest impact on the markets, particular currency crosses. Interest rates. Higher interest rates cause a currency to appreciate in value due to increased investment under higher interest rate climates. However, a stronger currency has its own issues. It will make exports more expensive, and higher interest rates also make the cost of borrowing more expensive. Okay, lower interest rates. This is where we want to be with low interest rates. They cause a currency to devalue. There is less investment due to the low rate of return. Interest rates drive the flow of money, which is a very backbone of the Forex markets. So whether interest rates are high or low, that's what's, the backbone of the Forex markets. People like to get paid on their money, right? Manufacturing data. This is a strong indicator for industrialized countries. It is bullish if the nodes are higher than expected and bearish if the nodes are lower than expected. And the nodes are numbers, by the way. Employment data. Higher employment numbers will be bullish for that currency, as lower employment will be bearish for a currency. Inflation and consumer confidence. Higher inflation and higher consumer confidence, those are positive economic signals and therefore have a bullish effect on a currency. Yet again, weaker inflation and weak consumer confidence is a bearish signal for a currency, right? That means nobody's really spending. There's something going on behind the scene. The gross domestic product, the GDP, it's considered more of a lagging indicator, but of course, a higher GDP encourages bullish price action, and the low encourages bearish. So your first job as a Forex trader before even opening up your charts, guys, is to be aware of your economic calendar to see what fundamental analysis could affect the markets and the currency pairs that you may personally be trading. Now, non-farm payroll. It happens every first week of the month on a Friday. So the first Friday of every month is non-farm payroll. Be aware of that. Non-farm payroll causes the markets some of the markets, depending on what currency you're speculating and things of the sort, act kind of funky, right? Because it's that big of a release. It's a statistic research recorded and reported by the U.S. Bureau of Labor Statistics intended to represent the total number of paid U.S. workers of any business, excluding the following employees: your general government employees, your private household employees, employees of nonprofit organizations that provide assistance to individuals, and farm employees. So if you don't fall under one of those categories, this is what is being reported on for you. This monthly reporting also includes estimates on the average work week and the average weekly earnings of all non-farm employees. The total non-farm payroll accounts for approximately 80% of the workers who produce the entire GDP of the United States. That's why this is such a big news release. The non-farm payroll statistic is reported monthly on the first Friday of the month of every month and is used to assist government policymakers and economists to determine the current state of the economy and predict future levels of economic activity. NFP also creates a lot of volatility and havoc in the market. Straight after the data release, there will be a sudden spikes in price action on all USD pairs. It is advised that you stay clear of an NFP day and start trading the following week once there is a stronger sense of direction. So, for instance, NFP, guys, was just Friday. I don't think there was a whole bunch of movement on NFP from that I noticed on the pairs that I was trading, but correct me if I'm wrong, Brian, did you see much movement?
Say it again. Oh, I'm sorry.
Did you see much movement for NFP Friday? I don't think
I didn't even look. Man, you know me, man. I stay away from that.
Exactly.
I don't even look at the charts when that shit comes. The news and all. No, dude, I don't play that anymore, man. We don't
Say that.
look for those whipsaws. That's gambling, bro.
Man,
We
listen
don't
to
teach
the man.
that here.
Listen to the man. Now, that's not to say you can't make money, guys, if you trade NFP. But smart traders or new traders,
Use a risk account or something.
bingo.
Don't use your compounding main account. Use a risk
Never
account that's
put your
made for that.
eggs on the
Something that you
same
know,
basket.
an amount of money, extra amount that you know that you don't care if you lose in literally in one sweep, even if you have a stop loss, because your stop loss can get jumped.
Straight up.
Yeah. So.
All right. So, technical analysis, guys. Any questions about the fundamentals just yet? Or no? Because now we're getting to the good stuff. Now, Brian Shannon, from his book, Technical Analysis Using Multiple Time Frames, his quote, "You need a well thought out plan which anticipates all potential scenarios to keep you from making impulsive and emotional decisions during market hours. You are being bombarded constantly with new information from peers, from Bloomberg Television, from price action on the charts itself if you're watching the charts, different websites, etc. Trading, guys, is a business. And if you want your business to thrive, you must have a business plan which you have the discipline to execute flawlessly." We're giving you a plan, guys, to follow, right? If you don't like that plan, come to one of the leaders. We'll help you set up your own plan. It does not matter. Long story short, you need a plan. So
We actually have a plan already typed up that's editable if you really want one, and then you can edit it yourself. So we give you a template if you want it.
bingo. So some of the concepts, guys, that we're going to be going over is right here in front of you, okay? The basic concepts, which is your trade plan foundation. We're going to go over the market movement. We're going to go over support and resistance, market structure, what's a trending market look like, a consolidating market looks like, different types of candles. We'll touch on the MACD and the exponential moving average, which I don't think I touched on the EMA last time. I do apologize. In the deeper part of this of study, the Sherpa system is where I come in at, right? I teach you the quarters theory. I teach you some of the Elliott Wave. I teach you a deeper study of market structure. I teach you the proper break of market structure, what that looks like. We'll get into Fibonacci retracement. And then after this course, actually, I may release the order blocks. Okay. And then we'll go into like market patterns such as the teacup, your wedges, your pennants, your flags, those things, right? Your M's and your doubles. I mean, your M's and your W's. And then we'll get into a specific candle pattern, or a specific candle entry pattern, I should say, market timing and divergence. I think I didn't go over order blocks, and I didn't go over the market timing too thorough the last class. So the market movement, guys, understand that whether it's a bull or a bear, it's never a smooth ride. It's never just pedal to the floor, haul your ass up, and it's never a steep slope sledding down. Okay, it's never a smooth ride. The currencies are neither appreciating nor depreciating. Okay, there are popular sayings of Wall Street, which you should live by as a trader. Number one, never go against the trend. We are trend traders. Not only that, that's going to give you the most potential to profit following the trend. The trend is your friend. Number two, keep both of those phrases in your mind, okay? The trend is your friend. Never go against the trend. By looking for entries within a trending market, traders have the best chance at making a large profit on their risk. Traders who continuously attempt to trade against the trend by attempting to choose the tops and the bottoms, the M's and the W's, they generally lose more, and they lose quite rapidly, actually. The three market trend methodologies explained above are the core price structures and rhythm of the markets. To successfully trade the Forex market, you must understand the underlying movements. You must understand its rhythms and how to recognize future turning points. The markets always move within the framework of an underlying market wave, pure price action, and Elliott wave, whether it be up, down, or sideways. So an uptrend. An uptrend we call a bullish market, right? This is when the bull commands the market. It's considered to be in place when a market is making higher highs and higher lows. Once established, only buy positions are to be taken. An uptrend, also known as the bull trend, is identified by a series of rallies where each rally or swing exceeds the highest point of the previous rally peak. That sentence is telling you, let me rephrase it like this. An uptrend, also known as a bull trend, is identified by a series of rallies where each rally or swing breaks structure of the exceeding highest point or the previous rally peak. The decline between the rallies above the lowest point, the decline between rallies ends above the lowest point of the previous decline. So looking at that chart to the right, the HL means a higher low. The LH means a lower high. That picture is a representation of when a bull trend basically starts and ends. Now, on the start, where it says the start of the bull trend, it broke that first high, that first peak, where that red line is drawn from. Once price broke that, that's the start of the bull trend, basically. So we wait for the retest down to that same structure for the next entry to catch the next bull wave up. When price breaks below a low on an uptrend and remains closing below it, that may be the start or that may be the end of that uptrend. Got tongue tied. Come on. A downtrend. This means sellers or bears control the market. A downtrend is in place when the market is making lower lows and lower highs. Once established, only sell positions are to be taken. It's the exact opposite. A downtrend is also known as a bear trend, and it's usually identified by a series of rallies where each rally breaks the structure of the lowest point of the previous rally decline. The incline between rallies ends below the highest point of the previous decline. So again, the LH is lower high, LL is lower low, HL is higher low, right? So the start of the bear trend, notice that LL broke the previous low, that break of structure, that valley, right? That's what we want to see. We wait for the break of structure. And then from the LL, you have the next high peak. That's a lower high. We want to see that lower high be created for our entry. And then we write it down all the way to the next LL, or the lower low. The bear trend ends once a high is broken. So if a higher high is created, then hey, that you're either in a retracement or that bear trend is ending. What's a consolidation look like? It's sideways market. Sometimes it's called Medusa. That means, it's stagnant, it's stuck, it's not moving anywhere, right? Trading a sideways market is also known as range trading. It involves trading a market that is consolidating between obvious support, the bottom, and resistance, the top levels, the high and low, and the red line. So the support, I like to call this a support like a floor. We stand on support, right? Support is what lifts us up or holds us up, right? And a resistance, I like to call that the ceiling. Like if you jump up, you're going to hit your ceiling. That's your resistance, right? often resulting in high probability entries with good risk to reward ratios. Trade signals are given near these levels where price is likely to bounce from. So I don't recommend trading in a consolidation, guys, but if you got the itch to do it, if you're scalping, this is how you would do it. Basically, you enter at the highs and the lows. Eventually, the market will find its direction and break through one of those key levels, though, whether it's high or low. So that's why I don't really trade it, because we don't know when it's going to break out one of those levels one way or the other. What is support and resistance? The ceiling and the floor, right? Support, market structure that price uses as a floor to bounce up. What is resistance? Resistance is market structure that price uses as a ceiling to reject off of and go down. So again, if you jump up, you jump off of support, you hit your ceiling, and that's your resistance. Resistance is at the high, supports are at the low. This picture, the image to the bottom right of the screen where it says resistance and support, this is when resistance becomes support. Whenever price breaks above that resistance line, that's structure, right? The resistance was structure. So if price breaks that resistance, we are waiting for price to test that resistance, what was once a resistance, as support. That's our entry. Market structure. Your market structure, guys, they're found at your swing points for now. This would be considered major market structure at your swing points, at your higher highs and your higher lows. The reason why I call that major structure is because of the move that it produced after it was validated, right? Market structure is an area of great significance when dealing with technical analysis that's around price when it approaches support or resistance. There's major and minor market structure. For now, though, we're just going to focus on the major market structure that is usually found at the swing highs, actually at resistance, another typo, and at swing lows at your support. At these critical areas, we can speculate what the market will do in the future based on price action and historical price data. It's at these areas, different types of candles form, which is the price action that we read to understand what is going to happen, whether it's going to break through or bounce off of it. A retracement. What is a retracement, right? Retracements are the counter trend. They are the moves that go against the impulse wave. So once price hits a support or a resistance, depending on the trend you're in, it will enter a retracement or pullback against the prior trend. These retracements are measured using the Fibonacci retracement tool. That's big. It is within this pullback where we find our entries for trading. Okay. So, and then we'll cover trends and retracements more in Elliott Wave. That's a deeper study. Now, what is a candle? What types of candles are there that we really look for and pay attention? And what do some of these candles mean? At these areas of market structure, price action paints candles that tell tales about future price movements. An arrangement of candles, they are known as patterns that we recall for future reference. This is where, and those patterns are like your double tops, your double bottoms, your M's and W's, teacups, blase, blase, right?
Is that a different project?
Well, wait.
But it says.
I was like, wait, well, you asked me.
I got her.
It's okay. You're fine. Hold on real quick, guys. I actually have to run to the restroom real quick. So if you guys have to as well, do that. I've been holding.
Woohoo! Thank you.
Break time.
Guys, so just a second, okay?
Paloma, yes, this Wallace, this class will be available for replay, right? I know we're recording it, but you're going to post it?
Yes.
Okay, sweet. So yes, Paloma, this will be recorded. I mean, it is recorded and it will be available for replay. You're very welcome. I'm going to go use the bathroom myself.
All right, guys, I'm back. Let's see. Judy's asked the question that would be a key level, right? I'm not too sure what part we were on when we were, or what we were speaking about. If you're back, Judy.
You came back too fast. Did you wash your hands?
I always wash my hands, ma'am.
Oh, Val, you couldn't resist.
Oh, that's right. Oh, that's good stuff right there. So we'll give people, a few more moments to come back from getting drinks and restroom breaks and things of the sort. Once Brian gets back is when we'll really resume. Are there any questions so far?
I'm back.
Oh, there you go. See? You wash your hands, Brian?
Come on now. Come on now. Come on now.
Hey, I had to ask, man. I was asked too.
Val started it.
That's good stuff right there.
It's always Val.
Hey, that's okay. Hey,
Always Val with those dirty jokes. She got jokes. All right, class is in session.
Yeah. All right. Let's get back to it, guys. Boom. So, this image to the right, we kind of went over when I went over the price charts. I introduced you to this candlestick, basically. No difference, guys. Red and green is the colors we typically use. It doesn't really matter the color that you use. You can have this pink and purple, black and white, red and gold. It doesn't matter. They're all going to mean the same thing, right? Each individual candle within a candle reversal pattern tells a story about who is gaining control of the market, whether it be bears or sellers, or the bulls, the buyers. There's a few different candle bar formations that we'll cover, because these are the ones that paint the most and they mean more than some of the others, basically, right? They include the doji, your spinning tops, your hanging man or your pin bars. Then we've got our entry candles, your engulfing and maribozus. Again, then you have our entry candles, the engulfing and maribozus. And so when these come together, they create different reversal patterns off of structure. There are a great deal of patterns that form over and over, but we will only focus on a few high probability patterns for our setups. So again, you don't have to recognize every single pattern, guys. Just hone in on a few, 1 to 3 at first, right? Whoa, that is crazy. So the first is a doji. The doji looks like a plus. It's virtually a weak candle. It means that the open and close price is virtually the same. It has almost no body, and they're really, really short and tiny. This candle suggests indecision or a battle between the buyers and the sellers. Nobody's really gained control when you see a doji. The doji also has various forms. So what we need to pay attention to when we see a doji is we pay attention to the preceding candles, and then we pay attention to the candle after it. Okay. The doji is equilibrium between supply and demand, basically equilibrium between the buyers and sellers. It's not something that I'm going to take a trade off of. It's not necessarily something that I look for. All right. It's just good to know, what does that candle mean? Because the following candle or candles tell you basically what's going to happen. Spinning tops, again, they're still a relatively weak candle, not as weak as a doji, because they actually have some type of body. They have long upper and long lower wicks with small bodies. And a wick, guys, is the vertical black line to the north side of the green. That's a wick at the top. To the south of the green box, that's a wick to the bottom. Those are wicks. Color of a spinning top isn't important. Again, all this means is indecision between buyers and sellers. It's a relatively weak candle. Again, it's not nothing that I'm going to personally try to take a trade off of or even look for. The hanging man, right? This is a bearish pattern formed at the end of an uptrend, and it's called a hammer, and it's a bullish pattern formed at the end of a downtrend. It's identified by small bodies with a long lower shadow or wick. So to the right, you've got the green hammer, right? Notice that it doesn't have a wick at the top of it. Neither one of them do, right? The color doesn't necessarily matter. And what matters is the position. Is it a hammer or is it an inverted hammer, right? Now, understand though, if you see this hammer, the hanging man green, right? That's a bearish pattern formed at the end of an uptrend. Okay. Now, sometimes the hammer can be inverted where it will have the wick at the top and just a smaller body at the bottom. That's just an inverted hammer. The pin bar or the shooting star. That's created when the open or close, the open, low, close price are roughly the same. So this middle candle is the shooting star, basically. It will have a long upper wick or long wick that is generally 2 times the length of the body. And what this shooting star means is sellers are rejecting the buyers. The long wick means the market tested a resistance or support, and some type of equity or liquidity pool was located. Some type of really strong support or resistance was really located. It indicates a prior trend is about to end and may begin to either go into a downtrend or consolidate. The Maribozu. This is our, how do I want to describe this, man? This is like the cream of the crop type of candle right here. Okay. Now, even though it's the cream of the crop, guys, these things, they paint, but they don't really paint like that. And I'm gonna show you guys on the chart too. It's our favorite candle. It's our favorite entry candle. It's got no wicks at all on it, or small wicks, very, very small wicks. And depending on the color, your high and low or your open and close are going to be virtually the same. So what I mean by that is you got your open price on the green Maribozu and your closing price on the green Maribozu, right? If that wasn't a Maribozu, that's perfectly fine. But then you've got the red Maribozu where that open and close price is virtually the same as the green. And this candle pattern, guys, it's either a continuation or a reversal. So depending on what the second candle paints or what color that Maribozu candle is going to determine whether price is going to continue the trend or reverse. These are very powerful on the daily and the weekly charts and the monthly. Now, the engulfing is our next favorite entry candle, and these paint quite often. So you will see more engulfing candles than Maribozus. It's usually at the bottom of a downtrend or consolidation range at levels of support or at the top of an uptrend. It's a small, well, I'm not gonna say a small, but on a bullish engulfing, a bearish first candle is followed by a much larger bullish candle. That's body is bigger in size and it's telling you the momentum and who has control. So the greater the size, the more strength the buyers have. So let's look at the bullish engulfing pattern, which is the picture up top, right? The green big body candle. Notice how small this red candle is in relationship to the green candle. The green candle could pretty much, the red candle can pretty much fit inside the green candle. So it engulfs the red candle. That bearish engulfing is the exact opposite. The green candle can fit inside the red candle. So that red bearish candle engulfs the green candle. That's letting you know who has momentum and control of the market. And that's why it's our favorite entry candle. Because it's almost like, yo, there's no doubt who's in control. Follow the trend. A morning star, it's a 3 candle formation. It starts with bearish momentum, okay? And the second candle is either going to be a spinning top, doji, or a hammer. Okay, previous candles that we just mentioned, right? The third candle is bullish and must close within the upper 40%. This is when you break out your fibs of the first candle. Now, I don't know if you all can see my mouse or not, but looking at the bottom 3 candles of this graphic image to the right, the first red candle has a wick at the top, but no wick at the bottom. That is something that we have to train our eyes to identify, because what that means is if there's no wick on a candle like that, that means it's at some type of structure. Okay. And that's whether it's in a Morningstar or Maribozu or you name it. That means it's at some type of structure. After that candle, you've got the spinning top right there in the middle, right? That spinning top, again, it's a weak candle, right? It doesn't necessarily tell you who's in control. Now, the third candle in this 3 candle formation is a bullish, full body, full of momentum type of candle. If you take those wicks off of that, both of those 2 bearish candles could probably fit inside that single bull candle. That's the type of momentum and things like that that we want to see when we're looking for a buy entry. Okay, when it's shifting from from a sell to a buy, we want to see full body candles. An evening star is the exact opposite of the morning star. Okay, so I'm not going to go over it too much, but morning stars on the left, evening stars on the right. Think of it as like the sun rises for the morning, right? And it sets in the evening. Excuse me. What is an inside bar? This is actually kind of like a trade setup more than it is like a reversal or anything like that. It's a 2 candle formation, and what it means is the second candle is contained, or it will fit inside the previous candle. It's the exact opposite of the engulfing. Think of it as a reversed engulfing, basically. It's a high probability setup based off price action alone. The formation indicates a time of indecision or consolidation, and they typically occur at market consolidation after a large move. And this type of formation would be like, I would say, creating like a pennant, and I'll show it to you on the charts. And these types of formations can form at key areas of support and resistance. So let's take a look at this graph to the right. You've got the mother bar up top. You've got the white mother bar candle. The inside bar, which is the black candle, that fits inside the mother bar, right? If it was reversed, it would be an engulfing. But since it's backwards, it's called an inside bar because the previous candle or the current candle fits inside the previous one. If it has multiple candles that fit inside that mother bar, it's just inside bars, right? And as it keeps going, that's what forms your type of pennant. Questions so far?
None yet in the chat.
Good. That's what's up, man. I don't know why that image was black and white, man. Now, so this will probably, guys, be the last section that I cover with you guys. I actually went over, but this is, or do I want to save this for Thursday? Because this is kind of like a deep little type of thing. How do you guys feel? What time is it?
You can always look at some charts and go over some of the stuff you're talking about if you want. I'm just.
No, actually, that's what I was going to plan on doing. So,
Can I see the black and white candle?
yes, ma'am.
You wasn't looking?
I blinked. Oh, that one. Okay.
Yes, ma'am. So let's do a consensus real quick.
You gonna do a poll?
Kind of, sorta. All right, so, well, people are saying save it till Thursday. Yeah. So I think we'll probably start on that Thursday, just because, guys, that is it's a heavy. I'm not gonna say, well, yeah, no, it's a heavy concept to understand. So I don't want to overload you guys just yet with nuggets. It just will probably confuse you a little bit, actually, more than anything. So we can take a look at some charts together. How about that? I more times than not, guys, I look at charts in between about 10:30, and I would say the latest I'll look at a chart is about 1:30, 2 o'clock. More times than not, I'm already have a trade set or entered by, I would say, 12:30 at the latest. What I do is I use the market's timing to benefit me by activating like pending orders, buy, sell stops, you name it, basically. And so that's why I look at it at this specific time. And let's just take a look at it real quick. Let me stop sharing. Boom. Boom, boom, boom. It's interesting, guys. This is some interesting stuff, isn't it? Let me get off of you. Get off of you. Wow. That's dope. Let me see. All right. This is the triple screen, guys. It's something that you guys are going to be learning. It probably looks like a bunch of mess right now, only because they're not all on the same chart just yet. Now, earlier I mentioned I was going to be teaching you guys, to choose 3 screens, right? And that's what these 3 screens are going to represent. Let's look at something real quick. Let's see. I want to take a look at you. Oh, what's that? GA? Perfect. All right. So whenever I come to these charts, guys, what I look for is my structure chart. my structure chart comes from one of three charts, and it changes every time I look for a trade setup, basically. Okay. What we're looking at, that's not the right one. What we're looking at is the British pound versus the Australian dollar, GBP versus AUD. And the first chart I have to identify before I can, speculate on a trade is my structure chart. Now, when it comes to identifying structure, right? My first chart, I want to identify three things. The most recent break of structure. I want to identify structure where stop loss should be placed. And then I want to identify structure where it could be a potential take profit. So again, you've got your most recent break of structure. Hold on, let me type this for you guys. I'm gonna do it on this chart. Most recent, let's see, break of structure. Hold on, boom, 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 boom. So this is what goes on your structure chart.
I love these three charts, man.
Bro, it's some powerful stuff, man.
I
Right?
love this technique, man. I do, man.
Pretty crazy. Bro. So it's like this technique, guys. It takes a lot of emotions out. It gives you that robotic thought process, basically. Okay. So if you don't understand it at first, that's perfectly fine. Just sit back and watch for the night, but just understand this is what I'm teaching you guys, right? So your first chart is your structure chart. It's going to be found either on your daily, your 4 hour, or your 1 hour. Now, going back to earlier, I said that also determines what type of trade you're entering, right? And this is why, because if we find structure on the daily chart, my stop loss goes on my structure chart above what the high. So if I'm looking for this short, my stop loss is up here from where it is now at 181 to 182. Guys, that's like what, 100 pips? If you have $1,000 in your account, 100 pip stop loss, you're on a micro lot size. You're no longer using the minis. You see what I'm saying? Versus once you go to the 4 hour, now it's a little bit of a different look. If we're entering here, this is our structure, right? This is going to be where our stop loss is. It's not necessarily so wide, okay? Now that we're looking at GBPA, I'm looking to identify my structure chart, right? So I look at all three charts to see where do I see these three things up here the clearest. All right, now I'm also looking at the daily chart to figure out what's going on in the most recent or the past few days, or maybe even the past week, that will benefit me as well as far as structure, okay? Because again, we want to be trading in line with the macro, not the micro, but the macro, the big picture. So automatically, to point out this bottom line, this dotted white line right here, that's a key level. All right. So automatically, I'm seeing this momentum. Well, first of all, I'm seeing this right here. Okay. It kind of stalled at this key level, overshot it a little bit, came back up, stalled a little bit, came down, but it came right back up. Once price breaks this structure with this over here, but comes right back into it, That's important because this structure down here is going to have to be broken in order for it to continue to go back down. All right, but that's not the case. So another thing I use on the daily chart or on my structure chart is the MACD. I want to see the where the momentum is, what's going on. You guys probably don't know how to use this just yet, but to explain it for you briefly, these dark green bars and how this one's bigger than this one, this one's bigger than this one, this one's bigger than this one, that's letting you know the bulls are in full control. These lighter bars, and they keep getting shorter, letting you know that you're either in a retracement, depending on the time, or that the bulls run and momentum has dried up. These moving averages, that's all they are, moving averages. But instead of being on the chart, they're down here. You use those the same as you would any moving average. Not only that, it also helps you pick out divergence. And not only that, I want to point something out to you with this moving average while I'm here. So what I'm teaching you guys as far as Elliott Wave, and this is a little bit off topic, but I just want to point something out to you guys that you all may understand on the next class, is Elliott Wave. So Brian, you see that?
Yep.
I can't make this shit up, bro. Like, this shit's crazy.
Yeah.
This is what Elliott Wave is, guys. It tells you the psychology behind the market's movements, basically, right? And it not only does it do that, it gives you different characteristics for each of these phases of the markets. So if you know what to look for within each of these phases, guys, you can identify, the trend and what's going on. So for instance, if we're in this part right here and we identify that it's already had one push up, two push up, and two retracements, we can almost say that, hey, this will be the final advancement towards a high. Be looking for a nice retracement. And it enters that retracement, which is an ABC type of retracement. And I'll show this to you guys on the chart as well. This is pretty crazy. Actually, yeah. A little B and a C before it comes back into bullish. Now, I think I'm going to use this for a little second to train you guys on what it is we're actually doing. So from this low to the high is the trend, right? And we always want to see the retracement coming back into the trend. And what we do is we fib from the low to the high to measure this retracement, because we already see that the bulls are in control. Anything in between this low and the high, any kind of trading or price return is just that, a retracement or a correction to the market. Until it breaks this low, it's still a bull trend, regardless of how low it comes. So you have to understand that, okay? Until it breaks major structure, a swing high or swing low or swing high, all of this is just a retracement. And our entries come in between the 618 and the 886, more times than not in between the 618 and the 786, met with previous structure of some point. But that was kind of off topic of what I was getting at with the MACD, guys, but I couldn't pass up that opportunity to point this out to you guys, honestly, especially with some of you guys already having taken the course once already.
And it's crazy because we're not even looking at a candlestick chart, a Japanese bar chart. No. We're literally looking at an indicator, and it is doing. And I know that market structure right there looks kind of awkward, but when it's not a candlestick chart. I mean, you go to the candlestick chart, and it will literally look market structure. So it's pretty awesome.
I'm gonna show it to them on the charts.
Yeah, it's pretty awesome that it coincides.
Hell yeah, bro! Like it's dope.
I love that 618 zone.
Bro, that's some strong stuff. All right, so let's go back to this real quick. Let's see here. So again, what I pay attention to, or what I'm looking for, most recent break of structure, structure to place stop loss, structure to place a TP. I'm referencing the daily chart to see what my previous day did and what my current day is doing. Maybe on this one, I would do my previous 2 days. Let me zoom in on this. All right. These three candles and these three candles. That's crazy. They're back to back, bro. So this bearish candle, this green, and this bearish candle, that is a perfect 3-candle break of structure. This, and this is also another perfect 3-candle break of structure. Now, how do we use this formation to our advantage, right? Let me go back and point out more breaks of structure. A break of structure, guys, for it to be a real break of structure, it requires minimum, whoa, three candles. 2 must be in the, I would say, in the trend's favor. All right, so a break of structure, guys, requires a minimum of 3 candles. 2 of those candles must be in the trend's favor and be full-bodied candles. So let's start right here. This white line is a key level delineating some type of major structure. Okay, you've got first candle. Even though it's right there on it, I can almost guarantee you it closed below the $2 mark. Your second candle, your third candle, clean break of structure. If you see this pattern, guys, or a clean break of structure, expect some type of return to test that structure. Because again, right, it was a support, price was above it. It was a support, broke through it. Now it's got to validate it as a resistance. All right, and that's what we look for. We look for the validation to the structure that was broken. Okay, let's keep going. Let's do this one right here. My toolbar.
Hey, Corey, look at that move right there with that big bearish engulfing candle right there. And you would think that that would be, you know, a sign that it was going to go short.
Right here?
Mm-hmm.
You are correct. Now, keep in mind, we are looking at this on the daily chart. Now, another thing I want to take a look at is it did go short, but it went short to some type of structure. So, and that's what I was about to get at. So here's that structure, right? I'll move it to the wicks, even at the wicks. Your first candle broke it. Second candle, third candle. Okay, cool. They were weak, but they still closed above it. Your fourth candle still went in the trend's favor and also had no wick. Let me move this back down. Look at this, guys. No wick at the bottom of this candle, right? Why is that? That structure is there. That's why. Now, it keeps going up, and then we see this engulfing candle. Even though we see this engulfing candle, that is great. We want to see that engulfing candle. But once we see this, if we were on a lower time frame, we want to wait for the retest to some type of structure. That retest doesn't happen till over here. And even then, it's not really a strong break of structure from right there. I think somewhere over here is a void as well, which is reacting and tested over here.
Yes,
But
sir.
Hey, so question.
yes, sir.
If you see that engulfing candle, right?
Right.
Well, let's just say like the candlestick indicators that you've went through thus far. But we'll use this one for example. Is there any indicators that you would like have us look at through a time of entry point? So like with this one, for example, let me see. I don't know if I can, like, since it's here,
Yeah.
like, would there be like a certain area you would say like is prevalent that you would enter at, or where you see you should enter?
Yeah. After the engulfing, more times than not, I'm entering off the second candle.
Okay.
Because again, this is telling you who's in control. Now, an engulfing with the right timing of the market, that's key. So for instance, had this formed, let's say had this formed in between, I would say, I guess now and London Open, or I would already be in a sell.
Okay. Gotcha.
I would already be in a sell. That would be a market execution versus. I'll just walk you through it. You'll see.
Yes, thank you.
No problem. But yeah, so a break of structure, guys, like I said, it requires a minimum of 3 candles. This setup over here took 4. But what I want to point out is, even though it took 4 candles, it's imperative to understand that as long as these candles are closing above that structure, that's still valid as a break of structure, because notice the momentum difference or the body size difference and the volume size difference between these bull candles and these bears, right? And then once you see this candle, oh man, this is your buy signal. If you wait until this candle closes and get in on this candle, cool. You experience a little drawdown, but not much, because those next few you profit. Let's see here. Go back to normal. Boom.
And remember, this is the daily, guys. So there's
just
in those 2 candles that he was just showing you on those, on that uptrend that you would have caught. That's a good amount of pips, just on those 2 candles. Remember, that's daily. So within those 2 daily candles, you're only trading in one of them.
Right.
And catching that complete rise. So just keep that in mind. Remember, we're on the daily chart.
And, all right.
Now,
so
how would okay, because those 2 candles that you were looking at look like smart money, order block, break a block, whoever the block. I mean, I know what I see, but I don't know what they mean. You understand what I'm saying?
Yes, ma'am. I do actually. These candles right here?
No, the big ones, them 2 twin towers.
Right here.
Mm-hmm.
The engulfing zones, yeah. Or the engulfing
yeah. So let's take a look at it though. Let's take a look. So immediately I see that they both have little to no wick, right? At the top. So let me delineate that, because we can go back to see what type of structure that hit off of. And I guess take a look. Bro, I know that was not all the way back here. What in the world? Maybe it was. Sure the hell was. All right. So this is what we marked up right here. Right? Let me move this out the way. If we scroll, these 2 candles right here is where we were. Or the structure that we're going off of, right? We're probably looking at this area right here. And to delineate that, I'm going to highlight these 2 candles. So that way I can go to the daily chart to see. Nope, I was off. I was right. Yeah, it was those 2 candles. I was right the first time. So look at, let's erase that now. Just look at how these candles are formed. Let's just scroll back to see what type of structure that they may have hit off of. Ooh, look at this over here.
Another engulfing zone.
Woo!
Exactly.
That's
Now,
why we teach you these engulfing zones and void zones, because they're very powerful.
very powerful. Now, these wicks, this is getting into reading price action, okay? Understanding that these candles have no wicks at the top, but they still produce some type of heavy movement off of something, right? Or away from something. This wick, this candle right here is actually a Maribozu. That's crazy. Those candles, guys, if we look back, a Maribozu hardly ever paints, but when they do, there's some strong as hell signals, man. This one's almost a Maribozu. It ain't got no wick at the top, a little wick at the bottom, but look at this momentum. Like, I can't make this up. So you could have entered on this trade, on this candle right here, and been straight, whether this was the weekly, daily, the 4 hour, you name it. If this type
Literally
of
engulfed like 5 candles, 4 prior candles.
exactly. And this is called looking at price action, guys. So 1, 2, 3, 4. That's a whole month that was taken back in 1 month. If that doesn't scream at you, change in momentum,
Down, yep.
nothing else will, right? Not no indicator, like nothing that. So price is going to show you before any type of indicator more times than not. But that was a good question as far
as indicators are more of a lagging. So
right.
that's why we teach price action, guys, is because you can see it happening as it's happening, not a lagging indicator.
Right.
Now, with that big old one you just pointed that took back all the money back.
Yes, ma'am.
Doesn't that leave a void for the future?
Yes, ma'am.
Yeah.
So they coming back.
Wow, you're learning.
Oh.
It creates an engulfing zone, or it's not really a void per se, but it is an engulfing zone, which is a very powerful, which will cause price to go back there. Yes, it's not really a void, but it is an engulfing zone.
Okay.
I would say a void would be more in this area for right now.
Yeah.
Because there was no green.
There's no green anywhere. And then if we look at this candle right here, this is, all right, so let me delete this first one. Let me delete this one right here. This middle red line is another key level, okay? Again, 3 candle break of structure, guys, right? So that break of structure has not been retested by any type of bulls over here just yet. So it's bound to be tested, just a matter of when. Now this is on the weekly, so it's going to take a while to play out, but just know that it's going to happen.
Guys, as a teacher's assistant right now, I want to point out how many times he's mentioned 3 candle break of structure. So if you got notepads, write that down and remember that.
It's always 3 candles, always require 3 candles. Now I'm gonna go.
That's what validates the break of structure. So that's a key element to remember in this Sherpa strategy.
Exactly. Now let me show you some examples of breaks of structure that weren't valid, I should say. Okay. Let me see. All right. So.
That was so important. I never knew it was 3 candles to break structure.
Yes, ma'am.
That's what will help. That is
wow.
That's a tool to help you validate.
That's like a big nugget. Yeah. Holy moly. That's important. I never knew that.
Yes, ma'am.
I remember hearing Max one day saying something about a 5 candle break of structure.
Is that what that might be what her validation is in her strategy?
Well, she just said it was a big area of extra confluence.
Oh yeah. Yeah. I don't think you need 5 candles.
You don't. But
that's a little
understand.
too much.
So you don't need 5, but again, you need a minimum of 3. And going back to the example I showed you all earlier that had 4, right? That's why I say a minimum of 3, with 2 being in the trend's favor. So,
hey, so I have another question. And this is like, I guess this is a personal. You both can answer this in a personal type of way. So, like today, right? Like around 2 o'clock when US 30 went completely haywire.
Right.
Or when the market went haywire, I should say.
Right.
When something like that happens, right? And knowing that US 30 is such a volatile market, or such a volatile market that we're trading on, what option or what decision would you make in situations like that if you're like a swing trader or like a day trader, like, but you want to scalp at that time? Because I mean,
okay,
yeah, go ahead.
So so you're not in an order already, right?
Right, correct.
Okay.
But you see it, but you catch it and you see the play.
So let me actually go to it so that way I can explain it to you. How about that? Let's see. So what happened today, guys, is this move right here. This shit's already marked up. This is crazy. And if this doesn't show you guys that, you know, sometimes technicals go right hand in hand with the fundamentals, honestly. But technically, had I seen this, was paying attention, I probably would have taken this trade. Now, if you are looking to speculate and you see this move happen, guys, right? Let it play out. Because if you try to enter on this short, just because you see it going short, look what happens. Like, you may experience some drawdown, and depending on how big your account is and where you put your stop loss and stuff like that, you might have even blown it, because like you said, this is a very volatile pair, right? So anytime you see a move like this, guys, always let it finish playing out. Wait for the retracement. Okay? Wait for some type, whether it's a single candle, a couple of candles, wait for some type of retracement, because what has to happen is this candle is going to break through some type of structure. Now, if we highlight that candle, or since we've seen this candle, damn, I can't believe I missed this. I'm mad.
Yeah, right.
I'm mad about that. Yo, I'm mad. That's crazy. 30
a lower
minutes.
time frame, that'd be a good.
Right. So this is that 4-hour single candle move, basically, right? Right here. So we're on a lower time frame. We want to see some type of retest to some type of structure that was broken. And this structure over here was broken. So this may be a nice entry, honestly. Where is that?
That last candle just pinned that structure.
Yeah. But I'm going to highlight some things. I'm going to work real quick, right?
We're going to watch you trade. Not place a trade, but, you know.
Yeah, just watch me.
We're going to watch you work.
Right? So, again, guys, just looking at price action. 3 candles break of structure, right? First candle, second candle, third candle. What structure was broken? It's all the way from over here. Right? So since this was already broken right here, this pattern broke it, but it was never validated, right? Was it ever validated to you guys? Did price come back near this? Yeah, it came back down, but that's to a different break of structure, not to this down here. This structure has never been retested as a support since price has been above it, which is more than fine. But when price approached it again, man, it smashed through that shit. You see that?
Huge void too. That's a huge void zone right there.
Exactly. So what I'm expecting, man, not only did it do that, it did another break of structure right here. Like, that's crazy. So let's see what that structure was. Because again, we like to go off the most recent break of structure, so that way we can try to enter the market sooner than later, right?
Right there to the left.
Yep. Boom.
Right there. Yep.
So now you've got this break of structure, 3 candle break of structure, right? Here's your retest. I honestly expect it to come up here to probably retest some of this area before the next short. But I can almost guarantee that it'll be short. Well, I would say an ABC correction before the next big move short. But
yeah, it's got to go up and maybe it might try to fill some of that void.
Right.
Which is probably still what, the 618?
Well, let's fit it.
618 void. I mean the 618 fib.
Look at that.
We don't make this shit up. That's 50%. That's 50% of that void zone.
Look at that.
Which is what we teach to look out for. We don't make this up, guys.
No, I promise you.
I called that to a T, bro. 50% is a 618. Perfect retracement.
Isn't that crazy? Like, yo, so these methods, guys, like, I don't even, like, honestly, like, I know how Brian and Season them trade, but I know minimum about voids and stuff like that. Like, I can explain it for a little bit, but they know more in-depth stuff about it than I do. But what I teach you guys coincides.
Hey, I gotta stop you there. Let's not get it twisted, because if you remember, Caesar learned from you.
Yeah.
Caesar started trading with you, so props to you, brother. He is who he is because of you.
I appreciate that. So, but yeah, man, like the methods, like they go hand in hand almost. You know what I'm saying? Like what I teach and what they teach, yo, it's just like synergy, bro. Synergy.
That's what's so great about being in this squad, because all of our styles, even Ryan's, they complement each other so well. It's not like you're learning one complete strategy that doesn't coincide with the others that you're learning from. That's what's really good about being in DX, because everybody you learn from, all of us, it all goes hand in hand. It's all price action based. It's all void based and block orders. And so
I love it, dog. That's dope. Now, here's what I'm going to show you guys. So this structure right here, this low, it only had a 1 candle break of structure, right? Remember, yeah, these are three candles that close below it, but what's missing? Another bearish candle in this favor. So all of this is going to be a retracement from this high to this low until this low or this high is either broken. If it breaks this high, you're looking at a bullish run. If it breaks this low, you're still looking bearish. Now, what I will say with current price action, since this is making higher lows, right? I would, like I said, expect something, maybe a shallow retracement. It may not even come all the way up to the 618. We're probably going to target that, but it could not. Now, this right here could honestly not even be the top of an A. It just depends on what happens with these next couple of candles, because this candle right here could just be a pause. And even though this is a 30-minute, it's a recent 30-minute, it's still painting. It could close bullish, right? Which makes this A peak invalid. So I can't really say that just yet, right? So I just got to let it happen, see what happens. But that's what I'm pretty much expecting, is a nice, because this is a pin bar hanging, man. Some type of inside return to this structure, another move up. But I could be wrong.
So Wallis.
Yes, sir.
George, did that answer your first thing about the
I don't think it did just yet.
Show example?
No,
break of structure. I mean, the break of structure comment, not the.
It answered that, but like now I guess you can like give both of your ideologies on if you're a day trader or a swing trader. How would you look at a situation like that? Would you even attempt to get into a scalp move like that if it was dropping? Or would you just wait till the actual retracement to take advantage of it that way? I know he said his thing. He would have he would have jumped in it though, he was saying, but like, I don't know. I guess you can give your two ideologies on it.
Yeah. Me personally, I like to see the move. I like to see an inside or a retracement before I enter. Unless like I said, if I go to since we seen this happening, right? We saw that happening. If we go to a lower time frame, and this is where, you know, the lower time frames come in so handy. Let's go to the hour. So let's say we seen this first candle happen. Let me use something real quick. How do I move that? Boom. Yeah. So let's say we seen that first candle happen. Let me do replay real quick. All right. So get that off of that. If I was speculating, guys, if I was speculating this market, right, I would see that, yo, price is at a nice resistance on our daily. And honestly, I see this high and this is a lower high. So it's already made a lower high, right? And then I see this candle forming, or it has formed an engulfing. I'm not going to enter in short until I see what happens with that next candle. That paints. Since I've seen that, I go to a 15-minute chart since I'm on the hour chart, and this is all time frame correlation. So I see my structure on the 1 hour. The time frame correlation theory says go to my 15 to see the entry. Okay. Now I see my entry. What candle, guys, that I mentioned earlier that I say is one of our favorite entry candles? I see a couple of them actually. The engulfings, right? So we've seen this engulfing at this structure, this engulfing at this structure. Look at this structure. Look at this formation, right? What is this, guys? That 3 candle breaker structure, right? Let's scoot up one more. Now, it broke structure. Since it broke structure, we want to see the retest to it. This is perfect. This is all normal, guys, what we want to see. Let's go another hit. So coming to price action, understanding that this high right here on this candle is indeed the high. Not this close, but this is the initial high that all price action must close above in order for it to continue bullish. All right, let's step forward again. Ooh, that looks bad, right? Now, this is your first candle that broke structure. We must see 2 more candles form a minimum in that same bias. Let's see what happens. It never happens, guys. 1 candle break of structure, that second one immediately came back down. Boom. So since this is the 15-minute chart, and then this is like an entry time frame, I've seen this, but I'm not even going to enter, guys. I don't enter just yet. Just because I've seen this, I don't enter. I personally would like to see some type of bullish return. So let's see. Has it happened yet? Nope. Finally, it happened, right? With this candle right here. So me personally, since this happened, I'm expecting a retest to this line right here. Only reason I say to this line right here is because this candle right there has no wick. So let's see what happens. Retest, right? Once I seen price being driven up there, I probably would have manually entered and been short with it. Let's see what else happens. Y'all see how that works? 3 candle break of structure, 2 are in my favor. The most recent structure was retested right here by this single candle for your entry. That's how I would have did it.
Damn. Wow.
Does that, George, does that kind of answer your question about as far as going over break of structure again?
Wait.
Okay, perfect, George. I just wanted to make sure that you got your answer. And then I answered you about the entry as well inside the chat.
That was A1. That was perfect, guys. Thank you.
Yeah.
What's the third candle?
This little green candle.
The red one?
Oh, and only 2 of them have to be in the favor of the trend.
Yes.
Yes.
That's a key. I was going to say
Candle.
earlier when I told you guys to write that down.
Yeah.
I write it
You
down.
have to remember that fact. You need 2 of them to go in the
favor of the trend.
way of in favor of the trend.
And it doesn't matter which 2. See, I was thinking it had to be like,
Doesn't matter which 2, but you need 2 candles with some type of volume in their bodies going in the favor of the trend. You got this first one, you got this second one. Here's the third candle that broke this structure right here. The retest to it. What I want to see is that, remember I told you guys earlier, we find the most recent break of structure, and then we want to see a retest to it to validate it. Here's that retest to validate it. If we look on a lower time frame, guys, we can break this down all the way to the 1-minute chart. Like, this is how precise price action is, right? Because we're on the 15-minute chart. Let's see what the 5 looks like. Look at this. You got 1 candle break of structure. The second candle, cool. But that third candle, guys, it's not in favor of that trend, is it? No. So you could have entered in right here too and been short. We can break it down to the 1 minute. Look what this is. Isn't this that hammer, right? Off of structure. Then you got a nice bear momentum. And if we fib from this low to the high, from that high to the low, where's that entry at, guys? Right? Look over here. 3 candle break of structure. First candle, second candle, third candle. Retest. I'm not making none of this stuff up, guys. Like I said, this isn't what I'm teaching you guys is nothing new. It's just a proper way to use it. But yeah, man, it's not magic. That's crazy. So hopefully that answered your question about how I would do the US 30. And
clear, crystal clear. Thank you.
No doubt.
Amazing.
No doubt. Let's see. Let me go back.
Speaking of, that price is definitely going to go back up in there and clear that void zone right there, that biggest vector candle. So sooner or later down the road in the future, it will.
Oh, no doubt.
So that's something to keep an eye on. How do you say it? Coviello?
Coviello, yeah. Yes,
all right,
sir.
yeah, that's something to keep an eye on, Coviello, if you pay attention to the U.S.
Right.
Hey.
That's grown folks' money, though.
Mm-hmm.
I love her, dog.
Gotta love Val.
She said that's grown folk money. Hey, this is a whole index right here, man. This is crazy. So to explain it, to give you guys, like, for those who are new, the difference between, or the size difference between stocks and Forex, right? So we all know that NASDAQ, Dow, on the US 30, right? They all close at a number, which is this number over here for the day, right? That's what we trade on the NASDAQ on Bloomberg. This is that number that we're trading versus somebody trading the stock market. They're trading the companies inside of that make this number. If that gives you a visual, or kind of like a visual representation of the vastness of Forex, right? We trade the big boy numbers. It's just crazy. Where were we at on GA, weren't we? Boom. Oh, so here's current market. Let's take a look at this real quick. It's fantastic. Let me see. All right, so even from this, well, I can see Elliott Wave actually. Just barely. Let me see. All right, 1, 2, 1. All right. Elliott Wave, guys, it never really paints perfectly all the time.
Measure move.
Right. So how did I identify this, right? The first thing I look for, like I said, is for the retracements. This first retracement was sideways. This retracement was more of a steep or a deeper retracement. From this low to this high, this low to this high, it's almost symmetrical movements. And then we've got a short leg. That's the 5 impulses up. Now, what we're looking at is a retracement from this low to this high. We're looking for the retracement to come. And I would say, since A was such a heavy move, A is a heavy move, B would probably complete up there. Don't expect it to really go too much further. And then C will probably complete down there somewhere. And this would give you a double bottom, right? And also this double bottom up here would be a higher low than this, rendering you to go back long. Now, is it time to sell right now? Who knows? I'm looking at this 3 candle pattern right here to see, hey, is that the break of structure? It's very possible. First candle, second candle, this will be that third candle. It just depends. It's at some structure right now, and with the structure being over here, we're on the, let me take a look at the 4-hour just to see. I'll pull up my MACD just to see. I kind of like the 4-hour structure better than the 1 hour. So let me go to the 30-minute. Now I'm seeing what I want to see. This is so from this break of structure, this high to this low, this is an ABC retracement that's completed on a minor level. Now this whole length though, I would consider to be wave B on a bigger time frame, I guess, right? So let's see what's happening. I need my 3 screens real quick. This is where we get into the triple screen. So hold on. Let me set my charts up for you.
Is that your kitty?
Yeah, dog, man.
I thought so. I thought that's what I was hearing.
Hold on. He's a spoiled brat. He's like a princess, honestly.
Hey, I had one of those, boy. I had a spoiled kitty.
Man, he's a reverse.
What? That is a cat I was hearing.
Yeah.
Could you just call him a prince at least instead of a princess?
Because he's kind of soft.
Listen to him crying.
He just wants some
He's a
loving.
little bitch.
Oh,
Hold on, let
The
me show you
cat, not Wallis.
Hold on, I'm gonna show you the cat, man. Let me
Is
show
that
you
a Siamese cat?
a reverse Siamese. Actually, he's pretty dope.
I understand they talk a lot.
Oh, he definitely talks a lot. Say hi, Pie. So,
hi, Pie.
yeah, his name's
Beautiful.
Pie Wacket. Pie Wacket from what's that movie?
Pollywhacker?
No.
You know what?
With the
Brian's
witch.
on timeout.
What's his
With the
name?
witch. Pie Wacket.
Oh, I thought you said Pollywhacker. I'm like, what
No,
the
Pie
hell?
Wacket. It's from that movie with the witch. It's like an old school movie. I forget what it is, but that's his name, man. Yeah,
Hocus Pocus?
No, it's a real old school movie, bro. I can't remember the name of it, but yeah, he's a reverse Siamese cat. He's
I've never seen one
princess.
a reverse Siamese.
Yeah, he's a princess because he's
That's
soft as hell, right?
beautiful.
He
Hey.
is gorgeous.
He's
And
a
I don't
metro.
even like
Give him
cats.
some manhood. Call him a prince.
I don't know.
He's
I tried to, but
metrosexual. Is it Witches? That movie Witches?
it might be. It
Okay,
might be.
that was props to Melissa, not me. She just ain't got no microphone. I got you, girl. I got
Thank
you.
you.
Come on.
So yeah,
It's
but
so
no.
funny because I wanted to say this is amazing. It's been great. But I wanted to type it, and then I think Melissa said it before me, and then I was typing, and I was like, I just need to take my mic and just say, this is just so awesome.
Yes, speak up.
He's definitely talkative. He loves
And
me
I'm
to
so
death.
glad it's recorded because I had to get up a couple of times.
Oh, no worries.
All right, so let me set up my triple screen real quick. Let's see, 4 hour.
Like this is something that this is something that I've never really done, and this is going to go in my repertoire.
Oh,
All
cool.
So,
What haven't you done?
I don't really practice this triple screen.
Oh, I use 4 screens all the
No,
time.
yeah, but I mean the strategy.
For the same currency pair?
I'm talking about the
On the same currency
Yeah,
pair,
Debbie does. I
I love
does
watching
4
all.
graphs.
Yeah, I like watching price action on
She
all
does
of
4
them.
graphs.
And see, I don't.
But I don't know if she does like uses
this?
your strategy where
Oh, I don't.
one is for one and one is for another and one is for
Yeah.
another. That's what I'm talking about. The whole triple.
Oh,
Scroll.
believe me, I'm here quite learning. I am all ears to make
This is
it
the
awesome.
Sherpa.
It's the Sherpa, dog.
This is
So,
Wallis's Sherpa.
what we have here is, what is this? Is this the 4 hour, 1 hour? Okay, so we got the far right candle over here is your daily. This is your 4 hour. This is your 1 hour. So what I'm looking for, guys, is to see where can I find my structure the clearest, enough to take a trade the soonest. So I expanded from finding, the most recent breaker structure to now to finding the most recent breaker structure to where I can identify an immediate or a sooner than later trade, basically. For me, they're all in the same spot, but again, I like to read price action, and the more candles that paint gives you, the most price action. That would be the 1 hour chart for me. I see over here on the daily, this is a nice engulfing candle. That's what we like to see. And not only that, if I really blow this chart right here up, this zone right here was an entry zone from a long time ago. I think this was the first move we caught. Then it kept trending up, which is perfectly fine. It did almost 100% retracement from this high to this low. I think this might be up here around the 886, but price is now back within this same zone, rendering it a sell, right? Rendering it a short opportunity if I drag it all the way over. So that's what we're looking for. Now let me delete that.
Got a head and shoulders there that right now it's retesting that head and shoulders.
Right here, right here.
It's retesting the shoulder line. Yep, where we're at right now is retesting the neckline, I mean.
Yeah, so what I would call this and this is the double top. That's your M formation, guys. So this is something you have to realize. M formations don't always form at the highest high. They form at the highs, not necessarily all the time at the highest highs, right? This is where a lot of people get confused at. This right here is a double bottom, believe it or not. And where's it formed at? It's at the top. So if you're just looking for M's and W's, guys, sometimes it can take you out of your position. Because like I said, this would be a head and shoulders, or some people would say this would be a M top, but double bottoms at structure. Boom, popped you up. Now, what I'm paying attention to is this engulfing candle, and where we are currently in this current day is perfect as far as what we want to see as far as an opportunity to possibly enter back short to continue this momentum. Now, the only thing that's got me kind of wary of it is that momentum happened when when Trump tweeted, basically. Anytime Trump tweets, man, this pair goes crazy, basically. It's crazy. So the 4 hour, I like to see that. It's at the structure as well. So is the 1 hour. Let me go with the highest time frame. I'm not going to do the daily, but I'll use the 4 hour. So since I'm going to use the 4 hour as my structure time frame, I now have to find my entry setup time frame. And instead of finding it, time frame correlation says use the 30-minute. So let me go to the 30-minute, or let me set up my charts back up now, so that way you all can see this, how this all plays hand in hand with each other. Ooh.
Wait, what?
You'll see. So there's 3 charts we have to pick out: a structure chart, an entry setup time frame, and then your candlestick entry time frame. That's why there's 3 screens. So my first chart is going to be the 4 hour. That's my structure chart. Okay. The structure I'm looking at is this blue and yellow line. My entry setup chart is going to be the 30-minute based off of time frame correlation, so I can read the price action. Okay. My entry setup is coming from either the 15 or the 5 minute. I'm gonna start with the 15 just to see what I can see. And already I see something, a double top. Not only is it a double top, it's a double top formed at that most recent break of structure. Not only is it a double top formed at that most recent break of structure, it's a double top formed at most recent break of structure with an engulfing pin bar candle. That's 3 confluences, guys, I just named off. Now, does that necessarily mean enter? No. So what I will do is draw a trend line because I want to see, do I want to do it on this one or just one? I'll do it on my entry setup time frame, which is right here. So what I want to see is price. I want to see price make its move first, right? It has not yet made its move as far as entering bearish territory. So this is where we have to sit on our hands for a little bit. What do you want, Pop? Hold on. There you go, buddy. You're free.
So we're creating a roadmap with our trend lines structure, creating a roadmap of where we want it to go, or where we think it might, or where we're gonna see it go.
Correct. So all a trend line is, guys, is just a slanted support or a resistance. So now we've kind of like created, like you see this triangle or kind of like a wedge or whatever, right? As long as price doesn't cross over this top structure, this resistance, you're still valid for the short. Now, with this being US 30, I'm not really too sure as far as like the timing of it just yet, right? I don't really trade this too much, but I do trade it. But I'm still working on the timing of it. So if I was seeing this and I knew the timing, it's 11 o'clock, I would expect one more push up that will probably test somewhere over here and incite people to go long before that push down. All right. Again, I would expect one more push up before that move down. And the only reason why I say always expect to push up is because I know what's above this point right here. And that's money.
Lots of money.
Lots of money. This is where people have stop losses and stuff placed, right? Not only that, they have pending buy stops. So if price does come up here, they expect it to continue to go. But we know from the higher time frames, right? From the higher time frame that, yo, our momentum is down, bro. Let's see. So this is actually probably a trade I might take tonight, honestly, Brian.
Yeah, no, I was looking at it because, like you said, if it doesn't break that strong support, the right where your 0.38 is,
yeah.
If it doesn't break that support, I mean, it's pretty much screaming a downline. And then if it breaks that trend line also, right, that's another. And I would say it would probably go down. Yep, I was going to say it'd go down somewhere towards down there. Yeah.
Now, where would you put your stop loss on this? Is what most people would say. Would you go all the way up here? No, I'm not going to do that, guys. No. So this is why it's handy to have 3 charts as well. Instead of using that, instead of using this high over here, let's see what the hour chart says or shows.
Would you ever use the EMA and go above the pivot of the EMA?
Above this right here?
Mm-hmm.
You know,
it's still a pretty big stop, but would that be considered a pivot?
I wouldn't do that necessarily. I've never really done that, so I can't tell you if it works or not, honestly. So I'm not gonna say yay or nay.
That's a good back testing thing, though.
It is. I mean, that's a nice suggestion.
Never thought of that. Back testing that.
You might have discovered something new.
Debbie,
Will only be-
I taught you how to back test. That's something good to back test and look for. Back test EMAs and
Yeah, because I mean, an EMA, I mean, if it's going to come to the 50, that's a 50. Yeah. So
Yeah.
if it's going to come to the 50, usually that'll at least stop it and pause it or something.
Right.
Yeah, we call it that.
What I would say is, if it does come to this EMA, we do expect it to stop. Now, I want to use structure though as well along with that. And from what I'm seeing is you see all this wick right here and this engulfing, and then this little retest. If we drag to the left, boom, right?
But check it out, right above the 50 to the left is structure. So it's putting it above the structure.
Right there. Talking about.
Well,
but so let's say we did use that though, right?
I'm scared. Still, don't quote me.
No. I'm just saying. So, but even if we did, let's say, use that, right? It's just like a safe area to put our stop loss. That's perfectly fine because it's with structure that if the market was to get up there and break it, more than likely it would continue to keep going. But that's not what's important. What's important is look at your risk reward ratio.
Yeah. That's
nice.
6
to
1. 5 to 1.
Like, you don't even need to catch this whole move.
Oh wait, it says it on there. Yeah, it's a 5. Yeah.
We don't even need to catch this whole move. Let's say even if I wanted to hold it to my first TP, that's still a phenomenal risk to reward ratio, right? Now, some of the things or some of the tricks to the market, which you guys will pick up from just watching different traders and stuff like that, is understanding that the market likes symmetry. And what I mean by that is it likes to move in almost equal lengths, right? Or equal price movements. So more times than not, an ABC correction will paint as a lightning bolt harmonic. Well, I'm not gonna say more times than not, but often an ABC correction will paint as a lightning bolt harmonic. And that is a very strong, I'm not even gonna use that. That's a very strong signal to either buy or sell depending on how it's painted, basically. So since we're expecting that, and I'm seeing that this may be rejecting at the 382, my understanding of retracements is a completed 382 retracement has a very aggressive and heavy move away from it. And more times than not, it's almost the same move as the first A wave or the A length or the A leg, however you want to say it. So what I do is I draw with the trend line from the high to the low to try to gauge the trend that's coming up, right? So that it gives me some more confidence as far as, hey, will it reach the first TP or the second TP? All I'm really focused on is 30 pips. Hell, 30 pips can be accomplished in a small move on US 30, but I trade the setup. And with this being on, we found our entry chart on the, our structure on the 4 hour. This trade is going to take hours for it to hit my TP. All right, so I have to understand that and be realistic with it. And as far as hours, since this is 4 hours, like, let's be realistic with it. So it's probably going to take another, I would say at least another 4 almost for it to hit up here at the 382 retracement. And that would come from the opening of London, I would say, with a false move up. If this isn't the move already. It's not a 3 candle breaker structure. Jeez, man, that's crazy. What is this doing? So yeah, it may not even come all the way up here to the 382, Brian. This is actually the 23% retracement where it's at.
Yeah, I mean that's still and who knows? I mean, with US, have you back tested that maybe it's not a deep retracement? Maybe that 23 to 38 is the
shit
golden zone for this US 30.
Right.
That's why back testing is super important, guys.
We don't know the tendencies, right?
Yep.
So I'm just going off of pure price action. And right now, pure price action is saying, yo, I've got a 1, 2, 3 candle break of structure on my 15-minute chart with the current retest to it. So let's check this out. What am I talking about, right? I should be just, oh, that's not it. What in the world? Boom. So we've got this structure from over here. Right? 3 candle breaker structure. 4 candles really. But small retest to it. Came up engulfing. 1, 2, 3 candle that broke this structure right here from this engulfing. There's probably a retest to it. Now, that doesn't mean I'm going to enter. I still expect one more push up. Probably that push might fail at the bottom of our EMA right here.
I tap it. Yep.
Yeah.
Call it a 50 tap.
Mm-hmm. Is that what you call it?
I forget what it does. No, I forget what Caesar calls it. I forget what he calls it, but yeah, it is a confluence though. Like if it'll just go up and wick it.
Tap it. Yeah.
It's like a midget like me trying to touch the bottom of the net of a basketball thing.
It already tapped it twice or tried, so.
Oh, no doubt. Let me get all this Fibonacci up here.
But I think it'll actually go up and it'll actually make contact with it, or it might wick above it but not close above it, and then it'll reject it.
Mm-hmm. But long story short, guys, we're looking for a short situation. It's just all about when now. And with this, wait, that's the 15-minute. 15, 1 hour, 4 hour. Let's go back to the 30-minute on this middle chart. Let's go to the 5-minute on this smaller time frame. All right, so 3 candle breaker structure, right? I can't make this shit up, guys. It's crazy.
Yes, all of you guys here from OTA, please unlearn OTA. Judy and Nadine said it right. Unlearn that stuff.
Get 3 candle breaker structure, right?
Wallis, just so you know, OTA is a company that a lot of the people on here have prior bad experience with. So,
ooh,
yeah.
Well, hey, welcome to the good side.
Yes, we have relieved you from the dark side.
Right. But so this pink line is the 15-minute structure. It's
You could say we're in recovery.
Hey, I like that. That's the
hey, really quick, Wallis. Tyler's got Tyler. We honestly we usually don't go this long, bro. It's just Wallis is on a roll and everybody's interacting, so we're going. But
go with it, bro.
Yeah, but we're just going with it. So he said he's got to go to bed, but it will be recorded. And also he asked about the first class recording.
I'll inbox it to you.
And I love all this learning. So thank you guys. And I'm going to stay on. So Brian, thank you. And
you're very welcome.
Wallis.
You can call me Wallis. Corey, it doesn't matter.
Brian and Wallis. Wallis, you're still going on.
Yeah.
Right?
I'm just, hey, I ain't going to lie. This is not my class. This is Wallis's class. I'm just a teacher's assistant.
I know, but thank you too. Yeah. So, no,
Thanks.
I'm learning a lot.
Yeah. As long as you're learning, honestly, that's what makes us, I'll say like my dad and grandparents used to say, it tickles my fancy when you guys are learning. So
love it.
It does. We love the fact that you guys are learning and in the chat and that you guys noticing stuff. And the stuff that you don't know or it doesn't make sense to you, don't worry. It'll start making sense, over the next couple weeks, couple months. Remember, there's people that go to school to learn a skill set that go to school for 10 years. So,
right.
But you guys are good. Yeah, this will make sense. We're very layman's term educators. We like to try to dumbify stuff as down as much as we can.
I'm just cleaning up the chart just a little bit. So what I've added, guys, is the RSI and the MACD. So the MACD goes on your structure charts to help you understand, the momentum, what's happening, right? What's going on. We already know from the 4-hour that, it's a bear move. This single candle took back a lot of that bull run. So, which is what we want to see. Now, our entry setup chart, we want to see it trending in the opposite direction of our structure chart. So that way we identify that this is the retracement. We like to enter at the end of retracements for the biggest and best potential to profit. All right. So structure, entry setup. Entry setup means, or what we're looking for on our entry setup charts is for price or the candles themselves to be at some type of structure, and to be at the structure that we marked up, or be in the zone that we marked up for an entry, right? So since we're expecting this right here to be, or from this top blue line to this bottom blue line, that's the zone of entry basically, right? So if price is tapping it and you see some shift in momentum, that's what you want to see. I personally, like I said earlier, expect one more push up. And that push up will be a full body candle like this, guys. And if that's the case, immediately after, or the second or third, the first or second candle after has to slam right back down into this zone.
Of course,
Okay.
he did put in a comment about Coach
Now,
Max.
if price comes up here, it can pin and create a higher high than this, perfectly fine. But if it's pinning, guys, to the high, understand until it crosses this top blue line, you're still valid for that short. And when it crosses, it has to do a clean break of structure. Okay. So again, I'm waiting for one more push up. And on the 5-minute chart, it looked like it probably will pin or pierce that 50 EMA before going down. Now, how does this coincide with the RSI and the MACD? MACD we've already used. We're done with that. The RSI is what's going to help us, again, determine an entry. So it's going to be an added confluence. The RSI lets you know the relative strength index of a currency. And how you use it is this top line, it's at 70. Some people customize it to say 80. But whenever this purple line right here is around this top line, that means price is heavily overbought. Look for an opportunity to short. Whenever it's down here, that means it's heavily sold. Look for an opportunity to buy. But we don't necessarily use it all the time. We use it at certain times of the day. Like for instance, in between 10:30 and what did I say? 2 a.m. Eastern Standard Time, and in between 7 a.m. and 11 a.m. for the New York session. Guys, those are the only two times I'm pretty much looking at charts. In between 10 and 2 a.m. and 7 and 11 a.m. The reason being is because that's when the London session in Tokyo, they overlap. We can find these setups to set pending orders for the London session to have price activated and go to sleep. New York, on the other hand, is a little bit more news heavy and choppier than London, so it doesn't necessarily move as smoothly. But we look for the same exact setups, though, that we would look for London in that same time frame for New York of 7 to 11. And more times than not, they play out. So if you guys notice that RSI is still down low, which me expecting one more push up, right? That push up could still be with this current candle. Now, how high is it going to go? We don't really know. All I know is it can't cross this top blue line. That's it. So what I could do is set my pending sell limit somewhere over here. Actually, I'm not going to say somewhere. I can honestly.
Would you just set an alert, or you would actually set a sell limit?
I do a sell limit because I go to sleep.
Yeah,
If you guys are gonna be up,
set it and forget it. Not like Caesar. Caesar and Ryan like to watch their trades. I'm like with Wallis, man.
Yes.
I
got
need
into
to learn
trading.
to set it and forget it.
Yes, you do. I got into
Deb,
trading
I've
to
learned that
save
too.
time. You know?
Deb, we've failed from looking at it going, oh crap, it's not going our way.
Yep.
Set and forget and be done.
Yeah.
Set it and forget it really allows you to pull the emotions out of it.
It does.
100%.
And you wake up
because think about it this way, guys. Think about it this way. When you get into a trade, you're already supposed to know where your stop loss needs to be and where your take profit needs to be. That's what we teach you. We teach you to know where your take profits are before you enter a trade. Okay? So if you already know where they're going to be at and you're confident with your trading, remember, you always want to trade with confidence, because if you're not, doubt, which Wallis taught you in the beginning, is a killer. So if you already know where your stop loss is going to be and your take profit's going to be, you can set it and forget it and just let it go. Remember, if you wake up to red, it doesn't matter. You're going to have losses.
Right.
But don't kill yourself by looking at the trade.
Right.
Let your trade happen. And if it hits your stop loss, it hits your stop loss. Now you just got one of those 20 trades that Wallis was talking about. You just got one of them, which means you're closer to that positive. You're closer to that blue trade.
Basically.
Oh, that was so positive. You need to put that in a thing for me.
I love Valerie, dog.
Yeah, put that thing on the t-shirt, bro.
That's hilarious, dog. So
I don't teach. I just have the good analogies that I throw in every once in a while.
Hell yeah.
Ryan's the group guru.
So I'm expecting
hype man. He's the DJ. I'm the hype man.
Hey, I like that. All right. So listen, guys, I'm expecting one more push up. All right, before London. Okay. And what I did was I fibbed from the break of structures high to the low. Right. And I got my stop loss. My stop loss comes at the 1.1 or 110% retracement. Right. Coincidentally, it's with our 50 EMA. That's pretty dope. So I feel pretty safe putting a stop loss at the price level of 27975, which is just a little bit higher than this, but it's above this structure and it's above this structure. And then my TP, my first TP is always the 272. My second TP is always the 618 down here. It's more times than not, guys, it's always going to hit one of these two. Definitely the first one.
Corey, can we see can we snapshot your fib settings?
Oh, most definitely.
Awesome, thank you.
Yeah, definitely different fib settings than you guys are probably used to seeing.
Yes, and I'm dying to ask that question. Why are all the different instructors, everybody uses a different fib setting? Why? And what is that? What are the different levels? Why are there different levels for fibs and all of them seem to work for somebody?
Notice that they're all Fibonacci sequenced.
Yeah. So this actually, I'm gonna answer that. Write that question down, and I'll answer that for you the next class. Because once I teach you what Fibonacci actually is, you'll be able to understand it a little bit more. And why?
Well, I've gone through a couple of the classes for Fibonacci, and I understand the Fibonacci sequence, but I don't understand why you would use, say you use these levels, Ryan might have a different set of fib levels. Somebody else will have a different set of fib numbers.
You know, I'm not really too sure, but then again, like I said earlier, you know, this is like an individual sport. It's just your
right, gotcha.
It's really part of his strategy, and because Corey, most of them, a lot of them don't have all of those lines that you have. A lot of them have, you know, like the 2-3, the 50, the 618, the 78. So.
Ooh, okay.
Right.
Yeah, I don't really pay attention to the 23, the 50. Only ones that I really pay attention to is the 382, because that's going to produce a heavy move off of it, and then these main three right here, the in between the 618 and the 886. Yeah. That's my entry zone.
See, now that's funny. You use the 886. Do you have a 7? Oh, and you do have a 786.
Yeah, there's a 7.
Mhm.
Yep. Yep.
Huh.
Those are all Fibonacci numbers. They're all Fibonacci sequence numbers. So all he's doing with having more, he just has more zones.
Right.
And then some of the zones he doesn't activate, but he just has more zones, but they're all still in the Fibonacci sequence. It's just he uses more of them to use his confluence, different confluences.
Now,
Cool.
I
Thank
will
you.
tell you guys not to worry about these 2 top pink ones just yet. That's actually part of institutional order flow that I'm not going to teach you guys yet. So don't worry about these 2.
That's an advanced class.
Yeah, that's advanced, and that's how you get like super wick entries and shit like that, man. It's advanced. That's all I can say about that. So yeah, don't worry about these 2
I
top.
like to get whipped around. I can't wait.
Hey, hey, I'm gonna get you there. I'm gonna get you to the promised
Just
land.
kidding. The
So,
pun.
hey, but listen though, look at what this candle's doing.
I know.
Yeah,
Like,
that's awesome.
If this fails like this, yo, I can't make this shit up, guys. That would be like, prime entry.
Yes,
Now,
George. Yes, George. You're correct. You're correct, George.
What did George say?
He was talking about the confluences, the multiple confluences, EMA 50 rejection, zone rejection, and then the trend line break.
Yeah.
Perfect.
Confluence.
Those are 3 confluences. And you could probably find some other confluences in there as well, like the Fibonacci. The Fib is another one. So yeah, but I always go, and I'm sure Wallis, you'd agree with me. I always try to get at least 3 confluences.
Oh man,
strong ones.
Put it like this: the more confluence you get, the better.
Yeah, I mean, you don't want to look for like 10 confluences, but 4, 5, 6 confluences, strong ones. It's probably going to go the way that you're wanting it to go. So.
So what I will say about current price on this candle, if this candle closes like this, guys, I expect this next candle to do a nice move up that probably barely passes this wick. It definitely isn't going to pass this wick. And then that would be, it will close up above all of this right here, which is perfectly fine, right? And then after that 30 minutes, so that would probably put us on the 12 to 12:30 candle Eastern. That would probably pin up, hit these stop losses from over here, and then shift the hell up out of there. So that's what I'm expecting. But again, that's all speculation. It could not even come up there.
Hey, Corey.
Yeah.
Why don't you draw that out and take a screenshot, and then we can revisit it on Thursday.
You're right about that.
That way they can, I mean, and again, guys, if it doesn't go that way, it's fine. Remember, we don't predict the market, so we don't put anything in. We wait for the market we react. We don't predict. That's what we teach, is we react. We don't predict. This isn't gambling. This is a strategy.
Let's see here.
But see, you're doing that, and that's not an equal measured move, right?
What, this ABC?
It's an ABC, not a 1-2, not a Elliott wave.
Oh.
Yeah.
Elliott waves usually have equal measures. Not all the time, though. Not all the time. Remember, nothing is all the time 100%. Okay.
Right.
Nothing in trading is going to be 100%. That's why we do back testing, because remember what I showed you with the vector candles that we did?
Yep.
Remember, it wasn't 100%, but it happened like, what was it, like 3 out of 5 times or 5 out of 7 times. So now you know you have like a 75% chance that when you do see what we just back tested, that 75% of the time it is going to do that. So you look for some more. That's what gives you the strength of the confluence, is back.
Right.
Oh, wrong chart. 30-minute of what it was on. All right. So we'll get this back, but just look how this stuff reacts to these levels. I told you guys this was the retest of that most recent breaker structure. Here's that engulfing. Now this would be, all right. So on this time frame, what I would say, A, B, C, that this will be, that C push up on this 15-minute time frame is going to be our entry, right?
Right.
right? So on the 30-minute, it's going to paint up here too. So just wanted to point that out to you guys. But damn, man, with
Then
this
it's going to
happening,
come back and retrace.
that's what we're looking for.
I know. And then
All the money. All the money.
Guys, yo, I really appreciate you guys. You guys killed this, man.
Wallis killed it. Wallis killed it.
Hey, I have my partner in crime moderating the chat. I needed you, bro.
Yeah, you guys did great, man. Me and my partner are always looking at like US 30 and always contemplating it.
Yeah.
It's like a jigsaw puzzle. So you guys really deciphered it very well. Thank you.
Hey, you're welcome, my man. You're welcome.
Definitely. Have a great rest of your night, all right, guys?
Oh, you too.
Take care, buddy.
All right.
Good night, Cole. Good night, Cole. We get up tomorrow.
Definitely. Appreciate you. Yes, sir.
Let me see. Let me go back.
I heard that Jose talk.
Yeah.
Were we on GA earlier?
Somebody said AU.
Oh, I'll do AU.
Oh, good. Yes.
AU.
I'm mad at AU.
I'm mad at AU too. Let me tell you about it, man.
I'm kind of mad at AU too. But
I'm super upset at AU.
yep.
It happens, man. It happens. So let's really look at this thing.
Ryan ain't give her no
break it down.
I actually broke this down last night, and I was I was expecting for it to go long some more. So this is where I was, right? This is ascending triangle. It actually went long, right? But it didn't break that structure. Boom. So it bit me in the ass. That's crazy. Now, to start AU, guys, what I'm going to do is, again, I start from anytime I look at a currency pair, first of all, I'm referencing the daily chart just to see what's going on. And something that we didn't do tonight.
News!
Yeah. Boom, heavy news at 4:30. Oh, yeah. No, that's old.
Hey, you had some heavy news last night at 10:30.
Yeah, that's last night.
Oh, holy crap. I didn't even know you were on here, man.
I've been on here the longest. I was the one that said you're the group guru.
Oh, shit.
Dope. So tonight should be a fairly easy, smooth ride, guys. Like there's hardly any news, and the news that is being released, it's light. It's nothing to really too much worry about. So we're in the clear. Now, we're on the daily chart.
Unless Trump tweets.
Yeah, unless Trump tweets. That's crazy, dude. So we're on the daily chart, and automatically what I'm seeing is what this move is, right? Yeah, we see a lot of bulls over here, but I'm only concerned, guys, again, with the current stuff. If I can see this right here and the current, I'm cool. Next thing I notice is that, let me zoom in a little bit for you. You've got this candle, okay? If we zoom in some more, and this is how petty the Forex market is. There's not even a better word for it. They're petty, because if you really look at this high in relationship to these highs, this is in fact a lower high than this high, and you can barely see it. Like they're petty, man.
That's crazy. I see it.
You see it?
Yeah, but nobody would really notice that if they weren't searching for that.
Correct, exactly, and that's the price action, guys, that you really have to pay attention to.
That's an M right there.
Right.
If you put it on the line chart.
Yeah, let me put on the line chart. I'll show it to you.
Line chart, guys. The line chart. Don't be scared to use the line chart.
I love the line chart.
Especially you newbies, don't be scared to use the line chart. The line chart can be your friend when you're looking for trends and M's and W's and support and resistance zones. It's really good for support and resistance zones. You don't want to trade off of it, but
I would say it's really good for identifying your major structure.
Yes. Yep. And then you go back to your candles.
But yeah, so yeah, that's how petty the Forex market is, guys. Like, when I tell you guys, you really have to treat this shit like a business. Like, yo, they want all their change, basically. You know what I'm saying? It's pretty crazy, man. So that was.
But you know what's crazy is it all closed above the 50.
Yeah, it did close above the 50. These three did, and then boop.
Boom. break of
crash right
structure.
back down.
But is that not considered a break of structure because it doesn't have 3 candles?
But this is the daily. So let's look at a lower time frame.
It's gonna be 10 candles.
Yeah.
No,
So
seriously.
after the daily, I'll take a look at the 4 hour.
Yep.
And we'll blow this up. Now, 3 candle break of structure. Low to 50, right? Now let's really look at this real quick. Let's dissect this move right here. Let's dissect it. Before I
Kind of
do
broke
that,
2 structures.
right? It did actually. I'm going to, oh man, wrong one.
Tell you what, Debbie, if you can get that psychology out of your head, boy.
Oh, what happened?
I know.
Well,
We're working on it.
Hey, that's the hardest thing to overcome. So you're doing good.
You guys see what I'm marking up? So this is a trend line. Break of trend line, retest to the bottom of it, retest to the structure, entry. I should have seen this shit last night, dog. I must have been sleepy. That's crazy. I'm so mad. I'm so angry. So if this is guys, this shows you guys, like, I've got 7 years and even I still miss some of this shit, right? It's gonna happen. We're human. We make mistakes, right?
This move is literally what you were just showing on the other one that we were going to look for in a couple of hours. That it broke that trend line. So George, this is that not vector candle, but the one that breaks through the trend line. That's what we were talking about. No, not that one. The other one, the to the left, right there. Yep. That's what we were looking at on the other. What was it? The US 30 or something? We were looking at something.
That's the break, and there's the retest. And boom.
And there's the retest, and then boom, there's your drop.
Yep.
So where do you anticipate it to go now? Long?
No, I expect it, since it's already hit this double top, I expect it to continue to go short.
Yeah.
But it's going to pull up to the.
It will still do a retest though, and
It's
the
going to retest that, yeah.
Right, I would say probably to this structure before it coming back down again.
You don't see it going up to the top structure?
Up here?
Uh-huh.
It's possible. So let's really dissect this real quick. So let's fib. Right? Let's fib.
Now you would put the fibs from so it's a downtrend.
Yep. You go from the top
from
to
the
bottom.
right.
heading down
Yep.
after the top.
Yep.
Yep. So you start at the top.
Do you go wick to wicks?
Wick to wick.
Yeah. Some people, you will see some people do body to body, but it doesn't matter. What matters is that you don't want to flip flop and sometimes do the wicks and sometimes do the bodies.
Be consistent with it.
Yes, be consistent with whatever works best for you. That's really.
I usually use them to hope that and pray and use them to my advantage.
Now, I will say I prefer to use the wicks due to the simple fact that that is indeed a high or a low.
That is where price went.
Correct. So, and if price gets back up into the zone of this wick and it doesn't cross that top, guys, it's still valid. So what do I mean by that? Let me find some prime examples for you. Look at this right here. Yeah, you see this wick? Let me zoom in for you. And this all gets back into price action, guys. So this is a wick, right? Even though this candle engulfed it, it didn't close. This close was not higher than that wick. It pinned higher than the wick, which is fine. This one pinned higher than the wick, which is perfectly fine as well. But they both closed either right at or just slightly ago. They're petty. The high of that candle. That's why I use the wicks, because that indeed is a high. If that helps you.
Yes, thank you.
So, but now that we're, right here, I'm expecting, we are at this structure, right?
Yeah, harmonic pattern there too.
Where you see that at?
I think I do. I mean, it already happened. I think it already happened.
I'm like, boop, boop, boop. Yeah.
No. From where the bottom of your trend line is. From there up to that top and then to that corner. Yep.
Oh yeah. So I forgot. That's either so let me try to paint it out for you. I think I know what you're talking about.
I don't know which. I won't be able to tell which one. Maybe a bat pattern. I'm not sure. I'm trying to.
I want to say it's
I don't see it
bat
drawn
or
out. I
something
see it
else.
in my head, so I know it's a back pattern. It is a pattern. Yep. Bam! I love my harmonics, man.
Wow.
That's crazy, dude.
I need to learn
Yeah.
those.
Harmonics is that's another advanced technique. Well, I'm not gonna say advanced, but that comes from the deeper study too. I used to teach it a little bit. I got out of it though. But
Yeah, we used to use it a lot 7 years ago.
Elliott Wave. Yeah, Elliott Waves, they're always like 1, 2, 3, 4, 5. It seems like after the 5th, or maybe close to the 4th, it's gonna reverse.
You are exactly right. So now that's something I'm going to touch up on Thursday. So Elliott Wave it tells you the whole cycle. So it goes like the trend itself, like for instance, this uptrend, it's going to go from 1 through 5. Okay. The retracements are always letters A through whatever, depending on the complexity of the retracement. And depending on when that completes, this is one full cycle of Elliott Wave.
Huh.
The only thing that I can't get in my head is, okay, good night, babe. Monthly, weekly, daily. I know, right? Monthly, weekly, daily. I can't get it all wrapped around
the time frame confluence.
Yes,
Oh, that's
what-
okay. I haven't gone deep into it just yet. Just just understand that it's coming. And I have a cheat sheet for you guys, honestly, that helps wrap. Let me show it to you, honestly.
Yeah, all this sauce, and this is just the first class, ladies and gentlemen.
This is just phenomenal.
This is awesome.
We're
this is
drowning
why
in sauce, dudes.
This is why I told you guys, when I've spoken to some of you individually, this is why I tell you guys, just be patient. I know the thing is, here's the thing. This is something there's money at the end of it. It's not a career. It's just money. And we want to get there as fast as possible, but you have to be patient with yourself. If you're not patient, you got to remember that is an emotion. You need to take that out and just give yourself the time to learn it and take everything out of your head, especially that OTA crap.
This is a time frame correlation chart right here.
Mm-hmm. We blow that OTA stuff out the ass.
Yes. Corey, so the classes are always going to be at like 7 or 8, correct?
Correct.
Okay. So George, the classes will be Thursday around 7 or 8. You should get an email, right, Corey? You'll send out an email during the day?
Yep.
Okay. Perfect.
Very cool. Thanks.
No problem. So, I mean, you can just take a screenshot of this or a picture of it, whatever. But basically how this works is, once you find your structure chart, again, we're using one of these 3 charts for our structure. It already tells you what chart to use for your entry setup. And then once your entry setup is in the entry zone, you go to your candlestick entry time frame, which is already told for you. So it takes all the guessing as far as like what chart to go to out of it.
Hey Corey, for AU, I saw it on the 4 hour, but then it looked better on the 1 hour. So I used the 1 hour, then I went to the 15-minute for my my entry chart.
Dope. You're exactly right using that, bro. Let's see. So let me put this on the 1.
Nice, and on the 4 hour.
All right, so that's the daily, 4 hour, 1 hour. So since this is the inside return and it already created a higher low, I'm expecting it to complete, maybe hit this structure.
Which will be avoided as well.
Before going back down. Another reason why I expect it to go back down is because, again, even on the 4 hour, we've got two bullish candles, but even though they're going away from this low, what has to happen? It's more times than not, there's another bearish move to create this swing point. For instance, Where's I don't even like using that. I want to find another downtrend. All right. So for instance, like right here. Yeah, this is inside return, or even right here. Even though this closed a green bar, there's a retest, right? Let's go toward the high. Here's the move away. Here's the retest to it. There's always a retest, guys. Move away, retest. Move away, retest. Small move away, red retest, right? Move away, retest. So I'm expecting move away with a retest. Uh-oh, hold on real quick.
This is some great stuff.
You're in trouble.
And you know, the thing is, we have a head full of knowledge. It's not that it's useless knowledge. We know a lot of stuff. It's connecting all the damn dots.
Yeah.
Yeah, that's what it is, man. I'm gonna help you all connect those dots though. So we're expecting push up, but
That would be great.
We're still gonna go bearish on AU. We're just waiting for this retracement to finish out. Now, I understand the timing of what's happening with this retracement though, right? We're looking at an Australian United States dollar pair before London, and it's retracing before London during the Tokyo session, Australian session. This is all what we want to see, guys. We want to see pre-London. We want to see it in a retracement, basically. And since we are looking for it to retrace, what I do is I fib. Okay, it's at the 382. It might hit up here at the 618, but again, it's all dependent upon it breaking this most recent break of structure. I personally, I don't really think it will, man. It may, but I don't know, man.
So you wouldn't consider the 786 at least for a wick?
Yeah.
That's where I had it wicking out before it at least started making that push down again.
So here's the thing about my 786. My 786 is more times than not where I set my pending orders.
You go short.
Yep. Whether to go short or long, just depends on the trade I'm entering. So for this one, it would be a sell limit.
Sell limit, yeah. So
So what would happen? Let's say in a perfect world, if it played out like that, right? Damn, I didn't realize I had that on there. Delete you. Let's say in a perfect world, it played out. I got my pending order right there. Stop loss is right there. Target goes all the way down there. Let me zoom out a little bit. Surely it can make it to the first target, right? I mean, that's a nice little trade right there for me to be sleeping, waking up to either
Sure is.
running. You know what I'm saying? Just set and forget it, y'all. Set and forget it. Just live your life. Don't be afraid to lose, because it's going to happen regardless.
The whole reason we have stop losses and take profits is so we can take our emotions out of it. And there's no reason to watch anything if your emotions aren't in it.
Bingo.
That's what's great about having those, is that you don't have to sit and watch your trades. Go live your life, like Wallis just said, man. That's what this is all about. Time freedom and financial freedom.
and that's where Deb lose all the time, because we watch it and it's like it's losing. It's not going the direction. Get out, get out, get in, get in, get out, get out. And then we're just stupid. Or I am.
Yep.
It happens though, you know. It happens, like I said.
But I started studying the Asian with the New York with the London.
Yeah.
And so I noticed if the dollar was stagnant or shot up or went up for Asia session, New York took it right back down, at least 10 pips. And then it would go back up or down. We didn't know where they were going to take it. The London, not New York, London, I'm sorry. And so if I saw, or Asian session took the dollar down right when London opened, it would take it up 10 to 20 pips. So I started just getting on the phone if I had to sleep throughout the night and just see the U.S. pairs and what was going on. I was like, I'm just going to put a trade on for 3 different pairs for 10 pips, the opposite direction. And I went to sleep and I made money every time, except for there was probably a couple I didn't if it was sideways. But I learned what the Asian and the New York and the London, or Asia, London, and New York was doing with the dollar. And it's funny how they stay in parallel and they go up and down within the range of that day.
That's my point. That's exactly what it is. And what you're talking about is that extra push that I always say I expect.
Mm-hmm.
That's exactly what you're talking about.
Yeah, if nothing's going on, I'll just like wake up and just look at it. If nothing's going on, I won't tag it. But if it's like spiking up really high right before London opens, then I'm like, oh, London's going to take it down for 10 pips at least. And so I take the US, Aussie US, the New Zealand US, and the Euro US and tag every single one of them for 10 pips. And it's probably 6 out of 10 times I gain profit on 10 pips from the week of doing that. But unless it's sideways, if it's sideways and I can't tell what's going on, I just disregard it.
That's a smart play right there. Just like I said, sit on your hands. Like not every day is a good day to trade. Not every night.
But if it's slowly creeping up and it goes right into London session, I'm like, man, they're going to take that dollar down right off the bat. And they do every time. And it could even be 20 pips. I just set and forget. And I'm like, I don't think they're going to go above, if the Asian session takes it up. I know London's going to take it down. I just know it.
Hey, Brian, what she's describing kind of sounds like the market makers method.
And I just started doing it. I mean,
and that's awesome because you're finding out your own. It's almost like back testing is what you're doing. You're checking the confluences between session confluences.
Right. I studied it and I studied the pips and I kept going back day by day and month by month. And I was like, wait a minute. Well, really day by day for the month. And I was like, wait a minute. I was like, there's 10 pips here right off the bat or 10 pips up right off the bat, but if it's sideways, then you just don't know, or if it's kind of squirrely. But if it's a straight shot up within that session, I'm like, oh, London is going to bring it down. And if London brings it straight down, well, London and New York, you don't know what's happening. But between Asian session in New York or London, you pretty much have, if Asian session takes it down, London will bring it back up to either take it back up or take it down. New York and London are different. But that's just what I kind of have done lately. Just correlate those pairs or just the sessions.
The session correlation. Yep.
And see if you see them for a while, you're like, man, they stay in a range. And then if London takes the dollar down, it could, London and New York are different. It's always the Asian session that sets the play. So the play. But guys, London and New York, I can't tell what's going to go on with the dollar. But the Asian session, London will play it in a tune compared to New York. I don't know. I just noticed that a lot.
And if you're winning trades, that's not a bad
thing. I know.
Thing.
I'll wake up. So I just go to sleep. I said, I'm just going to go to sleep. And then I wake up and I'm like, oh, shoot, this happened. But I don't want to rely on knowledge and doing all this other stuff. But I understand this so much more.
That's good.
Guys.
Hold on real quick.
And it's just the first class. Love it. It makes me feel so good.
I love it.
Oh my. I mean, it's incredible. I can't wait for more people to be on board.
I was very happy to see all of you OTA people on here for this entire 3 or 4 week class session.
I mean,
I know there's still so many more that aren't on here.
And just keep in mind, guys, that he's showing a lot of charts now, but it's after the class. Just keep that in mind, because a lot of the classes are going to be more the presentation side of things, and then he'll get into charts as well. But
but the presentation with the charts is really helpful.
Yes. Well, yeah, and the presentation is going to help. The presentation is what's going to help you guys understand this more, because that's when he's really breaks it down and gets a lot more technical and stuff like that. But in more of a layman's terms kind of way. So, but yeah, I mean, it's can't make it up. It's just shit happens, and we teach you how to capitalize on it.
No, it's awesome.
And it's just so funny how it's just one thing will click. For some reason, I just could never put candles and trend states and everything together. I don't know why. I can see it on a chart, up, down, this, that, go with the flow, but I don't know, read the wicks as much, or maybe some. It's not telling me enough.
It'll start to make
Give
sense.
yourself time, guys. Don't try to learn it all in one day. Just give yourself time.
You know what you guys need to understand also, and you'll hear Caesar talk about this a lot, is chart hours.
Right.
Chart hours. Now, and this is only when you're trying to get to be that professional trader. You got to put chart hours in. The more you look at a chart, and mark up charts and stuff will. You remember how I saw that M earlier, and I had him put the line chart on? That's just because my eyes are trained to see things. And when the more repetitiveness that you guys look at charts, and you put that study time in, just like you would in a college, you put study time in, and study time here is marking up charts. That's your study time.
You're so right, because just before this, me and Cortita, we kept talking about it, and Deb, you too. And finally, I was like going, we went from monthly, weekly.
Dude, I mark charts up every day, all day. So
man, I am just trend lines, and it just kind of started painting the picture from the top to the bottom.
Yeah, that's what we call it. It's called the top-down analysis.
Yeah,
I call it Inception. But you'll hear Ryan call it a top-down analysis.
Yeah.
Yep.
Yeah, I always knew it, but I just never actually, not that I haven't done it, but maybe talking about it.
You haven't done it. I've been trying to get you to
talking about it. Talking about it.
I would do it on my own, but it finally, maybe it was just like a light bulb or something that went on. And then finally it hit me. I was like, oh, this kind of works with this, that works with this, that works with this, that works with this. And this is what you do.
But you've been using fibs for a long time, though.
Me?
Yeah.
Oh, no, I like fibs. I do.
But it's just all making sense now.
Yes. And that's what I haven't. Yes. So it's all kind of piecing together. The M's, the W's, the fibs, the flags, the poles, the volumes.
I love it.
Market structure. Everything is kind of forming together. If I could just get my emotions
to
go together.
And that's where that set it and forget it that Wallis teaches.
Yes.
That's what we talk about. Set it and forget it, especially for you guys that don't have your emotions under wrap and trade like a robot.
Yeah, I mean, it's so dumb.
Yeah, it helps. It really helps. It helps you remove the emotions. You have to learn how to trade with it like a robot. Get a trade plan. Definitely have a trade plan.
Hey.
Wallis, you're the man, bro.
Yep.
Hey.
Man, that was awesome. Thank you, guys.
So before we get off here though, because this is the last.
Oh yeah.
Guys. So this current fib, guys, right? So what I did was I fibbed. Let me start over from to show you guys the power of these TPs and stuff, right? Let me delete that actually. I'll do a replay. So that's kind of like an inside return right there. We've already seen it, so I'm just going to use it, right? Fill from the low to the high. We want to see some type of retracement. Let's play it out real quick.
Wait, did you just said the low to the high or the high to
The
the
high
low?
to the low. I'm sorry, dyslexia.
Just double checking.
Yes, I appreciate that. Because I know I've said probably that a few times tonight, honestly. Now, getting into Elliott Wave, right? So we've got this low to the high. I see this retracement. Would you guys consider this more of a sideways or a deep retracement?
I'd say sideways.
Sideways.
Cool. Now,
Sideways.
notice where it's finding its resistance at, right? The 382. I always say these two are our TPs. And if we hit play, it's going to hit our TP basically, the 618.
Oof.
And this is why you can set and forget. Boom. So right there, it's hit our TP. Now it's in a retracement. Anytime a take profit is hit, guys, the market enters a retracement. Now, going back to this is a sideways type of retracement, right? What do you see right here?
A deep retracement.
Right. So you've got wave 1, 2, wave 3, wave 4. Now we're waiting for the wave 5 to go down. Now, this retracement retraced to the 382, did it not?
Yep.
Yeah.
Where's
so
this retracing to?
6187.6.
I would say probably the 382 again, because the market likes symmetry.
And repeats itself.
That's why you see that equal measure move in 1 and 2.
So Corey, I thought that if it did that shallow retracement first and it came to the 382, then the next retracement, which would be the deep retracement, would go further up.
And more times than not, it does. But what we have to take away is the guideline of alternation, right? So since this was the sideways movement, it's not really a steep one. This one's not really moving sideways. It's trending into a deeper retracement. You see what I'm saying? I'm still expecting a push up. Don't get me wrong. Now, and that push up is probably going to move us a little bit deeper. But it's ultimately we're still looking for the short position. It's just a matter of when, if that makes sense.
And remember, Paul, when it goes up, you're not just going to wait. Like Corey's not saying he's going to wait for it to hit the 382 and then just go ahead and get in. He's going to wait for more confirmation,
right,
to make sure that that is the reversal zone. And then he's going to look for his entry. So it might remember, we react. So we don't wait for it to go to the 382 and then say, okay, I'm predicting it's going to go down now that it hit it. No. You wait, because if it does go up to that 618, then you're going to look for the tells of, okay, now I should look for the reversal if it hasn't reversed yet. Same thing with the 382. You look for that reversal around the 382, the confirmations, and then you look for your entry.
Okay, that makes sense. I think my problem is waiting for that retracement and sitting on my hands and not taking the trade. But then I noticed with AU that it loves to respect that 50 EMA, and then the 50 EMA kind of lines up with the 618.
You guys are getting all this sauce, man. I promise you. I'm giving you guys a whole bucket.
That's awesome. We appreciate your time. I know you have not eaten dinner yet. I heard you say that at the beginning.
I haven't eaten breakfast.
I wasn't even going there with you, Brian.
I totally forgot it. Like when I start getting into this stuff, guys, like, yo, this shit excites me so much that I just forget. Like all
Me
time.
too. I do the same thing.
Stuff. And I just go. You know?
I'm on a 24-hour fast right now.
Hey.